Good morning.
Good evening. How is it
Yeah,
going?
good evening.
How's
Going well,
everybody
going
out
well.
there? Are you guys good? Anybody not happy to see gold? It's like every time we stream now, gold has made a new all-time high in the morning in the Asian session. Isn't that
Yeah,
something
yeah,
crazy?
a lot going on lately.
A lot going on, yeah,
It's
and
wild.
it's like I'm trying to keep a close ticker on what is said in Davos also,
Yeah,
because it's going to be quite a show. I'm sure it has been already actually. So
yeah. I was going to say it has been already. I think it's definitely going to sort of set the tone.
yeah,
Very much for probably long last, at least the first quarter, second quarter. I think from here. Yeah, there's a lot of moving parts, so I'm sure we'll get into it. But hello, everyone in chat. Hope you guys are going well. I hope you guys haven't been trying to short this along the way.
where's unbiased
Um,
trader? The poor guy. My God,
yeah, God,
I feel so sorry every time I see something like this. I have to think of you, dude. In case you're watching today,
I'm sure he'll be here
I'm sure too.
anytime. Yeah,
Oh my God. Yeah, and like it's written here, if you haven't done so already, please leave us a like, subscribe. I want to get actually the latest figures. Where are we now? 95,500 subscribers. So we are well on our way to 100,000 subscribers. And remember what was said very, very often here in the last weeks. Well, not last weeks, in the last 3 weeks, actually. As soon as we hit 100,000 subscribers, there is going to be a super awesome giveaway. And who doesn't want to win something nice, right?
indeed. Going to be massive for the 100K. So
Yeah.
yeah, definitely. If you guys haven't subbed, etc., jump on that. I'm sure you guys have that are here, but we'll keep harping on so we get that 100K.
That would be awesome. What is my new favorite indicator? The standard deviation channels.
Yeah.
I should. You know why I couldn't find it at first? No, that's not the one I was looking for. See, now I cannot find it again. I should star it. Standard deviation.
SPD, DEV,
Here,
CHN.
this one.
Yeah.
And
Yeah.
I'm going to leave it. Yeah, because I was wondering what it's going to show us for gold. My God, look at where we are there now. Crazy. What length do you usually use for this one? I put it to like 120 normally.
120. Yeah.
And anything else you need to adjust here?
No, I think that's all correct. Let me just double check against my. Yeah, that's it.
Yeah.
Yeah.
Okay. Cool.
Yeah.
Yeah. Crazy. I really
Yeah.
I
We've got
find
the source on the close.
sources on close. Yeah.
Yeah. Yeah. Okay. Cool. Yeah.
Yeah, it would be kind of interesting to put it to open also. Maybe gives you like earlier signals than
Yeah. Yeah, and you can play around with it with yeah, open, close, high plus low, open, high, low, close. The whole. You can set it to different moving averages, all sorts of stuff. So any of you guys out there, you can also set it to other indicators that you have.
that's
as
pretty
well.
neat too. Yeah. That's a good
Yeah.
idea actually.
So if you have like the Kalman trend levels, etc., you can stick it to that data. So whatever other indicators you put on there, you can base it from those as well. So, sorry, just 1 second. I'm just trying to log into some of my other stuff.
Scanning here through the time zones. It's funny, in the 5-minute band we have done the pullback already. The 5-minute channel from the top. Interesting. But it's also crazy if you look like on the 5-minute, the upper channel is at 4,914 right now.
Yeah,
It's so volatile. It's crazy, really. Like, I mean, we're talking here about like a day of data, if at all, and the volatility is just really, really insane. Yeah. Anybody traded gold? Anybody long gold, I should ask?
if you're long, you've probably had a really good time, as long as you're stuck with it. I definitely think this train is going to keep going. I think with some of the geopolitical stuff that we've had recently, and then there's the bond market as well, I mentioned with the JGBs. I think gold at 6K is very, very, very achievable.
Do you remember the beginning of the year when we were talking about, maybe like second or third quarter, 5K?
Slow down, yeah. 5.5K, we might, yeah. We could be 6K by, I don't know, April, May, something like that even.
I mean, the danger right now, of course, is then if like the geopolitical landscape calms down a little bit, however that is going to look. I mean, Trump does that all the time, no? He's like, has like one agenda, and then suddenly he forgets about agenda and barks at the next tree. And so, I don't know, could be the case here as well. And for sure would be interesting to see if gold, or in general the precious metals, we should say, can hold up to in a more calmer geopolitical environment, or if we're really then seeing a crash. Now, I'm not betting, of course, on a crash here. Quite happy I didn't buy those leveraged short ETFs on silver also. Turned out to be a good idea. Lucky you warned me about it. We gotta ride the wave. For sure, interesting today also to look at the indices, I think, because while gold, silver, of course, $95. That is, we were over 95 here, over 95.50 already earlier last night. Crazy. I think the indices are going to be quite interesting also today. So something like NASDAQ looks almost like a buy already here. I don't know. Do you know where the max pain for option expiries is today there?
I don't know about max pain, but the probability distribution is basically right on 25K.
Right, so on 25K.
25,006. So basically, 25.
Yeah, 25. Yeah, I mean, that could be something now to buy here. Like and trade it back to the middle band or whatever. But of course, we would need to have a bit of confluence there. I've not really been looking also at stuff this morning, except for cryptos a little bit, because I've been busy with other things. Did you trade anything already, or are you looking at the Aussie dollar for sure?
Yeah, not too much yet. My trading's been pretty light start of this year, even though there has been quite a bit of good activity, because I'm still trying to sort out all the moving stuff. So I've got trying to get all that done, the final, or figure out exactly how that's going to work.
Did you find a place
next week? I do have a couple places. So I just I'm waiting for confirmation to go and inspect and do all that.
Nice.
But then, it depends on when I can get in, because some are available sooner, some are like start of March. But then it's always that process. You got to go through everything, 5-6 weeks beforehand. So trying to nail that down, so then I can just get straight into trading and not.
That's always a good idea, to not trade if you're concentrated on other stuff. Like I said this morning, also had other stuff to do, so I didn't dare to open any trades. But let's see what it brings. I mean, the volatility for sure is going to be there. The question, of course, is it going to be there once somebody holds a speech in Davos, especially Trump, of course, or any other of his administration, and then we're going to have like one crazy candle on the hourly time frame, or is it going to be scattered around the clock? I hope, of course, for the latter, because all the volatility in just one candle is also untradeable, in my opinion. Yeah. How long does it take, by the way, in Australia to get internet access when you move to a new place? Is it like Germany, where it takes like 6 weeks?
Yeah, that's also the thing I've been trying to work out, because it depends on the building. Some buildings have everything set up neatly. Often it's longer if it's like a difference between like an apartment complex versus like a private like a house or something. And then it's going to depend on the provider as well that you go with. So those are some of the sort of niche like tedious little bits that create problems that I'm trying to tie up. Because it's been the toss between me moving altogether or staying here, turning the other room into an office and that sort of thing. So it's very 50-50 of what the best move is right now, which is making it very irritating. But we're getting there. So, yeah.
But do you guys have fiber optics internet and available in Melbourne?
Yeah, we've got fiber across the country, but then it will depend. Some have the old, because when they did the it's called NBN here, National Broadband Network, whatever. The project they rolled out, some of them, it was a terrible government thing. Yeah, it had delays, all this kind of stuff. So a lot of places are still the old copper.
Yeah,
to
same
build
here.
it. Yeah. So some places you can actually get fiber. Other places it's fiber to like the node, but then it's copper like to the building, and then so it's not fast. It gets bottlenecked, right? So
yeah. So it's kind of the same, especially in Berlin, where like a lot of old buildings who have like I used to have an office there where I only had an internet connection of 16 Mbit, and of course that's too slow nowadays for anything.
Yeah,
you cannot
exactly.
run that reliably. But now in my office here, I actually had myself paid for that manually installed fiber optics. So I'm the only office in this whole complex that has fiber optics. And at home we have it too. But lucky, of course, when we built our home, I was able to influence that, like everything is there and in place already. Because I don't want to go without it anymore, really.
Exactly. So that's another thing where I do have to check, what the building offers, that kind of stuff, because you just can't deal with that, those things. And then they always have problems as well, where stuff just goes out because it is connected to the old infrastructure.
Yeah.
Which I don't want that. So, but yeah, NASDAQ, like you were just looking at.
NASDAQ, hold on.
Yeah, we're now pulling
looks
down
like it wants to try to get to 25K right now.
Yeah, on the daily, it's right on it's sitting on the 100-day moving average and the 2 standard div on the daily.
Yeah, I actually thank you for saying that. That's like one thing, or the first thing actually I saw this morning, that we are in the vicinity of a bull market support band. So if you are like a longer term believer in the stock markets rising again, this could be a good time to pick up some stocks, in my opinion, at the moment, because this bull market support bands in the long term rising markets, you can see kind of the same picture also, for example, on the S&P 500, has historically always been a quite good zone to buy. Of course, there are exceptions. Some of you might remember last year when we had this crash. I'm actually not so sure what caused it back then. Do you remember that? It's just like a year ago, and I cannot remember what happened there. But anyway,
what happened there?
Yeah, what happened there?
Some orange guy just turned
must have been some orange guy again doing things. But long term, it has been quite an interesting region to buy into stocks again, and especially if we look at the NASDAQ, we have seen like the big and beautiful array of stocks like Apple, Nvidia, of course, as well, being mangled quite hard. And if history repeats itself, they will recover quite hard as well again. Nice. We have somebody who traded gold long. Done for today, done for the week, probably. Man,
yeah.
Congratulations.
That'd be one thing, just like buy gold and come back a year from now and
would
take a full
have been
holiday.
The smartest trade in the past 2 years, really.
Yeah.
Isn't Jonathan still long on gold?
I have no idea at the moment. I think he was, but I think he was trying to figure out the tossing up between a carry like that versus basically the carry on like a CFD versus like buying it in like a long hold ETF or something. So I think he is in that sense, but I don't think he went the swing.
That's the thing. It eats up your winnings quite fast if you hold this for like 2 or 3 weeks because the swaps are naturally quite high. I have a good question here, LJ. What setups do you take trades on? What's the best setup? Of course, it has to be the best setup you suggest for a beginner.
So I think if you want to make it very simple in sort of just starting out as a beginner, that kind of thing, I think the easiest bread and butter sort of trade setup is, you know, God, trying to think of the way to phrase it as to not cause confusion. So basically just market structure, right? So break of structure, just find the support resistance to the left. And then if you've got combine that with something else like, higher lows, higher highs. And once you get to a terminal resistance, if you get a breakthrough there, follow that break and follow that sort of momentum. Those momentum trades are probably the simplest when you're starting out. They're very clean, easy to define, easy to also figure out if you're right or you're wrong, right? Versus getting into, scalping small moves back and forth and that kind of thing when you're just starting out. So that would probably be my go-to 101, just beginning type thing. So we'll probably find some examples of that as we go through here over the next little period, and highlight some of them and give you some examples. So just give me 1/2 second. I just got to load up some of this stuff because my
in the meantime, I want to have
authentication thing is not working.
At euro dollar, because somebody mentioned it earlier. Yeah. Look, this is because you were talking about market structure. I think this indicator, I think I said it on Monday as well when we were streaming, is very, very good to identify market structure. So the standard deviation channel. Why is it good? Because, when you apply it with just one look at it, you can pretty much very easily see what is the current market structure. Are we in an uptrend still, which is true here on the daily for NASDAQ, for example? Are we in a more sideways trend, which is true, for example, for euro dollar? Or are we in a downtrend? Now I have to find something that could be in a downtrend. Dixie also more on an uptrend again, but like if I would make this longer, or we go back to, let's say, July, for example, the channel for sure would have shown here that a downtrend. So it's very easy, and this is where it all begins. If we are in an uptrend, for example, like NASDAQ, I want to make my life very easy. I want to not be the contrarian, meaning trying to be the one who catches the lows and highs. I want to kind of go with the trend here. This is why I said, for example, also here we have a confluence, which is like the second thing I would add to the recipe, where we have NASDAQ touching the bull market support bands, so the two moving averages you see here, plus we are at the lower area, or almost exactly at the lower two standard deviation band. Is it 2? Yes, it's 2. And so we have something that we always call confluence here, meaning like when things, the stars align, so to say, or the stars align, I think the English saying is here, meaning you not only have like an indication from one indicator or from price action or something like this, that this could be a good area for buying. You have multiple things coming together, and everybody is different there. So on the daily time frame, I like to keep it really simple, honestly speaking. It's very often that I really just look at the 8 weeks moving average and the standard, the bull market support bands. And with this new tool that LJ was showing me, with standard deviation channels, I think that adds really good to the mix. Like I said in the beginning, be it only that it lets me very quickly identify what kind of market structure we have here at the moment. I'm trying to find a good example for a downtrend. Yeah, here and maybe on cable, you can see, it's, I don't know if it's really a downtrend on cable, more like a sideways trend, slightly downtrend. And depending on this, so for example, here in euro dollar on a daily now, I would maybe, if I go down a bit here, let's go to 30 minutes. It's not so clear. Hourly, also not so clear. Okay, let's stay on the daily for what it's worth. So on a chart like this, for example, I could now say, well, we have the market is ranging. We are in a sideways trend, so it doesn't make sense to have trend following strategies in this case. So I need to add something that measures momentum, a typical oscillator maybe to the mix, and be it something simple like the RSI, for example. This is in ranging markets. Having an RSI also makes a lot of sense, in my opinion, because you'll identify areas like this. So where we had an RSI that was, for example, touching 70, the last time was here, where then the market, euro dollar, was already trading at the upper 2 standard deviation. So that could have been back then, not saying that I traded that sadly back then, but a good indication that maybe we are going to see a stronger US dollar again. So you kind of add it to the mix, and it's always hard to say that that's why I had to smile a little bit just now, because this question, what is the best setup, what is the best indicator, and so on, this of course something that we get asked a lot, and the answer always is, well, everybody is different. I think where at least we here at the Fivers so far with the people I've been streaming here always aligned is or agree on is that it's important to know the market structure. Are we in a ranging market? Are we in a trending market? And dependent on that, everybody has their own tools then. Like I said, I might look at simple moving averages and trending markets. I might also look at something simple like an RSI in a ranging markets. But what is important here is not really the indicator you use. Important here is that you have confluence. So not just a single signal from, for example, one indicator, but you have to layer it up. The more, the merrier. Too many, of course, also not good, because then you'll never get signals. But to really to help you to determine or to get the opinion, yes, this looks at the moment like this is a short signal or long signal. And then you can go about and look like from a risk analysis perspective, how does it make sense? Where do I need to put my stop loss? Does my take profit then fit to my stop loss, or do I have a structure like where I only have like half R, so I'm only winning 50 cents but risking $1, for example? This is stuff you should avoid. That's the next layer. Then you should have, at least when we talk about swing trading, and scalping sometimes is different because it's more difficult then. But I don't advise you to start scalping when you're still very new to trading. It's really, really hard. There are other factors that come in, like spreads and commissions, that weigh heavier on if you're profitable or not. But for normal swingish trading, so you stay in a position for a couple of hours, or maybe like 3, 4, 5 days, something like this, keep it really simple. Start with market structure and then layer on top of it. And it's surprisingly, it's not really, really hard to find trade setups, in my opinion. The hard part, and this is where most, not only beginner traders, also traders who have been long in the game fail, is the risk management behind it. Because they want to be right, they want the quick rewards, but they forget like, I'm risking $100 to just earn $20 or something like this. It should be the other way around. However, that means often that you miss out on trades or potential entries just because the risk setup is not good, which is very, very hard to do. Also for me, still to this day.
Yeah, and the same with that, exactly. Like the important thing is to remember, you're not coming into the market to try and be right. A lot of people want to force their ideas to be right because, it doesn't feel good to be wrong. You come in and, oh, damn, I was wrong. You feel silly, or you feel unintelligent, or, like you're not doing the work properly or something. But that's part of the game, right? That's part of trading. You're not always going to be correct. If you were, we wouldn't have a market. In order to have a market, you have to have right and wrong on both sides, right? That's an inherent part of it. And your objective here is not to be right, but to be rich, per se, right? So in that sense, maybe not exactly rich, but R and R, so they kind of rhyme. The idea is to focus on producing returns, making money, not being right. So as long as you're structuring that, and just like Dirk was saying with that risk management portion, is to just be net right in terms of the dollar outcome, not in terms of the overall success of every single idea that you have. So you got to focus on that net result of the dollar return, not trying to have every single idea that you come up with executed perfectly, because that's not going to happen. So I did have an example on Euro with some of this.
That's nice.
With the So this was the trade from Monday that we're talking about. I was saying, so as far as the original question, with the market structure type stuff, and I'll change the color just for this for just now. Let's go. We'll make it light blue. That should be easy enough to see. You guys can see that. Okay, so this was Friday's close. Obviously, Monday we had the Greenland stuff, all that geopolitics. We had the dip down, the gap down, then rallied pretty strong after that. Managed to maintain those levels, and you can see also through here we did actually break those prior highs, right? So this is an example where you've got higher highs created on any kind of pullback. It was a higher low, then this came into, this would be the confluence type thing we were talking about. So this is where you've got to pull back into kind of the middle of this total trading range, right? And you've got the confluence of the moving averages coming in here. Now, if we just, let's just get rid of that for now. That would be a decent buy area. So that is right by the previous low that we had here into the confluence of that. You can run something like a Fibonacci or something to find that pullback. That's just eyeballing it, looks like roughly the 61.8. And then that would give you your springboard to continue the trade. Now, once you're in the trade, as long as you continue making more highs, you can keep holding on to it. And then we've got a slight pullback. We've paused through there, boom, another high, and it keeps running. Now, these levels that we mapped out, which was the TP1, TP2, TP3, they pretty much go to some of these tops to the left, like I was talking about, and you can use them as market structure for potential targets. And I normally set out multiple targets, so you've got like a minimum expected solid and then the full outcome of the trade. Rather than just going, okay, I want the trade to go right to here, you've got certain levels of failure points or decision points where you might go, okay, are we going to top out here? Now, as we saw, we ran right through it pretty healthily. Small pullback, which just pulled back into the top of that level, and we kept going. And then you see how we are through here, full strength, right to the top. And then these sort of boxed areas they've got are mapping out other further highs and lows, support resistance from further along. So we had that area here, that area back in, December. Then you've got this higher structure that we were trading in until we broke down from that. So then you map out some of those areas and it gives you points to look at. And then you can decide how to structure the trade, how to place it. And then if we go to right now where we are currently trading, you could potentially see a slight further pullback to the 200 moving average, which would also coincide with the two standard div, negative two standard div that we're talking about in this channel. And that might be another place where either you shorted from the tops, might look to exit, or else potentially go long again from that point. There you go.
Yeah, trading can be so simple, no?
Yeah, and then you can, with that, you can come over to like the Dixie as well if you're trading euro dollar and compare that. And you see here the Dixie as well. We're now rising through here. We've broken that top. You can see we've got high, low, high, low, higher, low. Higher, high, higher, high. This has created a new high, high. So again, two standard div portion here and the 200 moving average. That would probably be your next target coming up through there, which would also imply, just like we're looking at euro dollar, for euro dollar to come down a touch to about 116.90. And that's where you get all of that lining up plus a cross asset, and see if you can see the whole picture coming together, then you've probably got a trade on your hands.
Nice. Yeah. Very, very good trade. And I mean, looking at trades like this, you only need like one a week for a trading setup like this, especially if it hit all your or blasted through your take profit targets. Do you like structure your trade in a way that you have like for a portion of your position already this take profit set?
So that'll depend on like the momentum, right? So if, as you can see, basically where those lines were the target areas through here, you can see, if I now hide that, you can see the momentum is very strong.
Yeah.
So this would be an instance where I'd probably just hold the trade the whole way through. But, say you got to go to bed or something, you might find a level and you just want to close out so that you don't lose profits or something whilst you're asleep. But say if momentum wasn't this strong and we started sort of chopping around, trading sideways a bit, then normally I'd take something off the board. But so long as you have that underlying structure, like I was saying, that, new highs being created, higher lows, I'll tend to keep a portion of the trade. And just like we were talking about here, with that confluence on the 15, you can also then go up to, it's a good idea to check other time frames as well. So you can go up through the 30, boom, confluence there, go to the 1 hour, you got the same set of moving averages stacking up through there. So you've got a clear across the board sort of turning point coming through. So yeah. And then once you do go out to these higher time frames, you can see something like this and go, okay, if we, obviously we punched right through, that might be exactly a point to consider selling. Because on the higher time frames, this is saying this is a bit overdone, right? So those lower time frames showed that it's still kind of in play. And even that, we did punch beyond. But this still shows you the overall trend has been down on the 4 hour. So punching outside of there, that's how you'd mark up like an extreme zone. You probably look to exit or potentially short for price to come back into average price. That makes sense.
Very good trade, and thank you for the explanation. I hope that makes things a little bit more clear, like how an individual approach can look to this. I want to add to this really to the importance of not just focusing on one time frame. I know a lot of traders, beginner traders, they like to just look at the 5-minute chart or 15 minutes or even 1 minute or something like this. But you have to be aware of the bigger picture. And when on the higher time frames, like LJ was just showing us, there's a different picture than on the lower time frames, then that should influence also your decision making on the lower time frames. It's extremely difficult just to focus on one time frame, and that goes into the next suggestion I want to give out here to new traders, to not do that, because you can see it can get quite complex. It looks all simple. When LJ explains it, it sounds very simple, but LJ is doing this every day for many years already. So of course it's his bread and butter. And in the beginning, of course, it takes more time for you to do something like this. You don't want to have like 20 different currency pairs and indices and stocks that you try to analyze at the same time. I think it's better really to concentrate on, for example, start with euro dollar, or if you want a broader perspective, start with a Dixie, and then you look like do you find confluences in the individual US dollar pairs like cable, like euro dollar, Aussie dollar, US dollar, Kiwi dollar, and so on and so forth. It's quite interesting, and for me, it can be. I remember when I kind of first understood like that you cannot focus on in individual currency and expect that it kind of has its own life that is uninfluenced from anything else. It's all mingled together. They are all correlated, even with stocks, with crypto nowadays as well, with metals, as we see over and over again. So keep it simple at the moment, and otherwise you run also into the potential danger of getting this analysis paralyzation, that you want everything to be perfect and end up not knowing what to do and not taking any trades at all. There was a question earlier here. I'm trying to find it here from Neko. Hey, Dirk, on my 5K funded account, there was a 2% loss. What do you suggest I do to recover that loss? It was all my 3-month saving in India as a student. Can you give a tip? Yes, I can give a tip. First of all, congratulations that you have a funded account.
Congrats.
You passed through the evaluation. On a psychological level, now, of course, I can understand you to see now, oh, damn, I have a loss. $111. That's like more than I can save up here as a student in 3 months. So obviously that's a lot of money for you, understandably. But you have to get out of your head, and I know this is extremely difficult, and it's more difficult actually doing it than me saying it to get this out of your head, to translate what you've lost there to your personal life, so to say. It's always dangerous to let real life necessities decide your trading actions. So that can be, oh, that's a lot of money here in India. That can be, if I don't succeed here, I cannot buy food for my family or whatever it is. You have to be you cannot attach your trading decisions to this. Your trading decisions shouldn't be influenced by fear. They also shouldn't be influenced by greed, obviously. And if I were you, I would maybe first of all take a little bit of a pause, maybe, to kind of calm down again, because otherwise you run into the danger that you do something like revenge trading, because you want to recover those losses very, very quickly. Most of the time, that doesn't end well, sadly. And you have done something right already, because you have reached the funding stage. On that account, I think you must have gone through 2 evaluation phases. Doesn't really matter, even if it's just 1 evaluation phase. You did something right. You proved that you can do it. Now, continue doing exactly what you did before. That's really the only thing there is to do. And if it doesn't work out, if you come in a situation like this where you are mentally strained and where you think that you cannot take it anymore, take a pause. There's nothing bad with, walking away from the markets for a couple of days, or even something like a week or 2 weeks. This is why the fivers have those open-ended. You have unlimited time to pass an evaluation when you're funded anyway. I think different story if you do it for more like 20 or 30 days on some of the accounts, but you wouldn't do that anyway. But there's nothing wrong with walking away a while from the market to kind of recover again. I do that quite often. If I, like in August last year, for example, I had a horrible month, but it was not the fault of the market. It was my own stupidity that I went on holiday with untested live algorithms already trading an account, which cost me I think it was like $15,000 or $20,000 that month. And it was my own stupidity. But after this, I walked away for a week from the markets because I needed to reset my mind. Because otherwise, I also, even after all this time, run into the danger that I start revenge trading. Because I have like this dog chasing me. You have to recover this. You have to recover this. You have to recover this. Don't underestimate, like on a psychological level, how difficult it can be to be funded. Do you have?
Yeah, I'd say don't.
Like when something like this happens to you, do you take a break or?
It depends why something like that is happening. If it's just been general trading and sometimes the market's just caught you offside, like I'll just keep going. But if I'm being pulled away by something else or distracted or something else in life is going on, then yeah, I can see that this is causing me to have imperfect either entries or exits or management of my trading. Then I will tend to step back. Now, either that might be I still want to be engaged in trading to keep up with the markets. I don't want to fall out of sync. In that case, I might just reduce the size, the positioning, or the risk, massively. I might just reduce it by 3 or 4x. That or else reduce the total volume of trades to 3 or 4x, reduce the amount of time I'm trading. So instead of spending however many hours on the market it might be, I'll just do, instead of 8 to 10 hours or something, I might go down to like 2 hours and just pick what the best 2 hours of the day where I've got a clean window outside of those distractions and just trade then, and then get on with the other stuff until that's sorted, then go back to the market. So kind of an example right now is how, like I was saying, I'm moving, trying to get all this other life stuff in check to kick off the year properly. These are the only 2 trades I've had this week. So from the Monday, it's the euro dollar trade, Aussie trade. Whereas normally I'd be, anywhere between 3 and 15 trades a day, quite often, depending on what style of trades, what style of, what's happening in the market, that kind of thing. So I've taken 4 or 5 trades this entire week so far. It's Wednesday, so that you can see that's probably 10, sort of 20%, 25% of typical. So yeah, massively reduce that volume because I've got other stuff going on. So I don't want to be pulled in multiple directions and then end up causing problems for myself, which I then have to go back and correct by doing more work, taking on more risk, entering new trades, etc. So it's often good to pull back. Sometimes it's similar deal to in the stock market when you go back to cash. Like cash is also a position. So not trading sometimes is also a position because you're protecting yourself from things getting worse, which you're going to have to make it up anyway, right? So I think that's kind of a good way to do things.
Yeah, absolutely. Especially, I mean, we talked about this in the beginning of the stream, if I remember correctly. Also, if you have other things to do right now, don't trade. Absolutely doesn't make sense. You want to fully be concentrated on the markets and not just, do one thing with one eye and trade with the other eye, and then you'll end up screwing up both probably, not giving it this focus. It's very good advice. For me, also always important, I need to have my rituals. Like I noticed that I have like at the same time breakfast every morning. Usually I enjoy a good breakfast with my wife because it's like the only time we really get to see each other every day. And then I have my ritual. I get on the bicycle. I bicycle always to my office to get a little bit of workout. Then I get on the treadmill here while I read some stuff. And if I repeat this, I'm usually more successful than when there's stuff like this morning, for example, that kind of breaks the routine. I don't know if it's just me, being a bit on the spectrum, maybe, I don't know, or if I like to think about it like when you look at, for example, pro athletes. Now, I'm not a pro athlete, obviously, but like if you look at golf players or tennis players, before they serve, for example, tennis players, they always do the same stuff. And if there is somebody disturbing them in their routine, by screaming like, "Oh, Roger," or something like this, then they'll stop and they'll start the routine new. Because they know if they have that routine, if they do exactly the same stuff before serving every time, the margin of error is can be easier calculated for them than when they're trying to do different things. Rinse, repeat, you have the same outcome. Now, of course, in trading, it can be more complicated because there are just more variables like influencing the markets. You never know, like the orange dude tweeting something again, sharing his private chats with with Macron, for example.
That's wild, hey.
It was really, really wild. And so there are things that you just cannot influence, and you have to prepare for them. And this is also for me something like when I know, okay, there is something going on in Davos right now, and there is going to be information, speeches that are heavily going to influence the markets. I'm going to be extra careful because it's something I cannot really factor in, and I do not like things like this. I don't want to be caught in a trade that by analysis was correct, but then ends up being not correct anymore because somebody said something stupid that has a lot of influence. So not ideal for me this week, the setup with Davos, but I'm still going to trade because it's going to cause volatility. And of course, as shorter term traders, we want to have some volatility. Yeah, we don't want those sessions where nothing is happening until New York joins, which we had also in the past year very, very often. You remember, like market on Monday it was the case because Martin Luther King Day in America, but the markets were basically flat for most of the day.
Yeah, because we had that impulsive drive off the open, and then it was kind of just doing nothing the whole day. That was the other trade, the pound trade, very similar. So just like Dirk was talking about before about sort of correlation. So this is something where we've seen basically a similar pattern. The overall structure is going to be slightly different across, euro, Aussie, pound, but sort of base setup was all the same, right? So that's when sometimes as well you can divvy up the trade. It's sort of the same trade idea, similar structure. They're all correlated. So they're going to move somewhat the same, but then different endpoints or other economic news that might come out and shift one or the other, either the wrong way or the right way. So you can also split up the trade into like 3 parts, kind of expressing the same trade idea across multiple assets. So you could have divvied this up to euro dollar, Aussie dollar, and the pound, and that would have come through. But you can see how the pound has gone all the way up, come all the way down to that entry point, whereas the euro dollar is still right the way up, right? And then that can help you as well with exiting some of the trades, almost like taking partials. So once you see the trade idea failing on one of them, you either exit that trade or you also start questioning if that's going to continue on the other correlating asset, which is another idea there too. So.
Great idea.
But as far as the ritual thing, I definitely have similar deal for myself in the mornings, which I wasn't doing so much last year because I was just too swamped, but I've gone back to now, which I always like to have a good sort of 3-ish hours from when I get up, and I sort of just ponder, walk around the house. I look at markets, I get up, walk outside, I listen to some, economic news, podcasts, that kind of stuff, formulate the ideas, sip on my caffeine, come up with some ideas for the market for the day ahead, see where everything was overnight, and then normally go and exercise, either go to the gym, go for a run, whatever it is. And then I'll come into the market and actually start deploying those ideas. So it gives me that sort of window of finding those setups and then seeing how they sort of start to play out over the next 3 hours. And then once I find the key entry, then I'll jump into it. So it's another thing of allowing those ideas to kind of start to mature, not immediately coming up with it, and in the next 10 minutes you're into the trade, right? So that's kind of the ritual type piece for me as well.
Nice. I'm always happy to hear, we've never talked about something like this, I think, and all the time we've been streaming now together, but to kind of hear like other people kind of with deviations from it, of course, but kind of have the same rituals or the same way of going about things. Talking about coffee, sip of caffeine, I need to refill my coffee. I'm going to be back in 5 minutes.
Yeah, go for it. Alrighty, guys. Chuck some stuff at me whilst Dirk goes and gets some more caffeine. We'll take a look at gold for sure. So gold absolutely on the tear at the minute. I'm sure all you guys are very, very well aware. We've been talking about it definitely since the start of the year, and obviously all last year as well. Now, this further sort of ballistic jump that we had the Venezuela situation, Greenland kicking off, and we also had Japanese bond market going pretty wild the past couple of days as well. So we had Scott Bessent coming out and talking about that. I think Trump also tweeted / mentioned some stuff on the side. Japanese officials also coming out trying to calm the Japanese bond market as well. So basically what that means is the yields on Japanese bonds have been rising very, very, very rapidly, and this is coming off a floor over the past number of years, decades, from basically 0%. So I think JGBs now are at 2.3 or so. And pretty much over the past, 5-6 months now, we've come up from like 0.5%, like 0.4. So what that means is a lot of money, and Dirk will come back and we'll probably talk more about it, has been borrowed in yen to buy foreign assets. So if the cost of the borrowing in yen now goes up, it changes the math on the trades that you've used the yen to purchase, basically. So we'll go deeper into it when Dirk is back. But that's basically been causing chaos across the board, and then hence rising bond yields globally, which means debt financing costs go up for everyone, including governments, and central banks are also starting to shift more and more. This has been happening for a while, but they're continuing to shift away from fiat and go more into gold, holding heavier stocks of gold. That's happening globally. So where we are now, obviously every single day seems to be a new high. So I would not be crash hot on trying to short this just willy-nilly, right? As you find some of these tops, you can look for some of this to, pull back into these kind of levels, because we do get these big drives higher, but it tends to be a bit of more consolidation, sort of sideways chop. So don't expect like a big collapse is what I'm saying. So, some kind of big move right down like that. You're probably more likely then to play the smaller ranges within here until we find the new sort of leg level, and then eventually kind of build off and go to the new highs. Right now, there doesn't seem to be anything stopping gold from running further. We've also got Trump speaking, I think it's 1 p.m. UK time or 1:30 at Davos. So definitely keep an eye out for that and any other further, inflammatory comments that he might drop, and you could see gold just pump even from here. So if you're looking to short this for a bit of a wander back into kind of neutral territory, with Trump coming out and talking, we could actually see another leg beyond this, and even right up towards 5K, depending on how extreme. So just be aware of the sort of geopolitics of everything right now. That's obviously the primary driver behind gold. Shiva's asking, tell us about your journey, if you don't mind, how you started trading, if you had a job, when you left it, etc. Yeah, sure, no worries. So for you guys that don't know, I started trading basically at uni. So 2013 now, so a long time ago. End of 2012, 13. So yeah, 13 years ago. I was at uni studying physics, hence got the kind of physics stuff behind me. So I was always interested in, math, very much a science background, that kind of thing. And I was at uni sort of wondering what I wanted to do as far as career and all that kind of stuff. And I was going to take a gap year, and then figured, okay, take a gap year, what do I do with my money in between? I had a couple of dollars that I had saved up doing various odd jobs. I did some personal training stuff back then. I did some fashion things, modeling stuff, whatever. So and also made a bunch of money gaming through old like Halo, Dota comps back in the day and that sort of stuff. So pretty much decided, okay, you got some money sitting around, what do? You invest it. Started learning about stocks, futures, options initially, and then decided just to jump into markets, start investing things. Then I learned more about currencies and sort of active trading. And I spent basically a month and a half teaching myself, and decided to jump in. Once I did, sort of took off, made a good bit of money pretty quickly, just after I deferred, and then decided probably never going back. And that's basically where it started. So I've been trading ever since then. The last job I had would have been at that time, I think when I was 20, I was doing, it was basically like tailoring, menswear, suiting, did some stuff for Mercedes-Benz, Fashion Week, kind of rubbish. But yeah, it's just been trading ever since. So that's how I got into it. Took off. I enjoyed it. Solving markets is kind of like it's a big puzzle to solve. So I very much enjoy the kind of macro fundamental type aspects, and very much like that science sort of background. Trading is kind of like you develop a hypothesis like you would in science, and then go and test it. Only here you develop a hypothesis and test it against the market and see the outcome result. So yeah, that's pretty much my journey in the shortest form I can put it, of course.
How long have you been in the markets now?
13 years. So
13
since
years.
2013. I can't remember if it was end of 2012 or no, it would have been it was mid 2013. I think. It's so long ago now. I can't, plus minus 6 months or a year. Yeah, something. Yeah, I'm trying to do the math. Yeah, it would have been Yes, 2013. Yeah, that's when I was 18. Yeah.
Isn't that crazy? Like to think back, and for me, it's like 2013. It's like 13 years ago. How can that be?
Yeah, exactly. It's weird. It does not feel that long at all. Super strange. So
it's like we get this question a lot here now. It's a trading view indicator that you can search for on TradingView. You just need to type in STD-DEV. Don't do exactly that one. Don't do the same mistake I did, who thought deviation is written with an I and not an E. And I was like, how come I cannot find this one?
Because a lot of people shorthand it with like an I, just because it sounds like that, right? And you see on Twitter, people say standard div, like DIV.
Yeah, exactly. Yeah, exactly. Yeah.
Deviation with an E. So
yeah, but it seems like, including myself, everybody who uses this indicator now doesn't go back because it makes things so straightforward. Not like I'm not saying like use this and you're going to be profitable, but it's nice to identify zones where markets can turn around. Also to use it for simple stuff like to identify zones where possible trade profits also can be. So very, very nice.
It's I feel like it's the supreme version of like Bolly bands in a way.
Yeah.
And it just captures the current market sort of temperament much better. So yeah, I love it, basically. Give me 1 sec. I'll jump back to your chart. Sure. I will actually grab some coffee myself. So
do that. Yeah. So let's see, where were we here? Oh yeah, I was just earlier when LJ was talking, looking at Bitcoin, because earlier was somebody asking about Ethereum. Now, if we look at the daily charts, Ethereum and Bitcoin kind of look the same. And by the way, this is also why I have been saying now since November last year that we are in a bear market when it comes to cryptocurrencies. You can see here again, so nice the deviation. So what works as bull market support bands, of course, does work also as bear market support bands. And here you had just a couple of days ago the setup where Bitcoin was trading at the upper standard deviation channel, and this one aligned very good with the now bear market support bands. So it actually acted as a natural zone of deflection, and you can see worked like a charm. Once again, we are already trading one band below that, so there was a potential trade all the way from around 97,000 US dollars down to 89,000 US dollars. Quite a good trade there. And again, just by having these simple moving averages, so bull market support bands, nothing else than simple moving average, 20 weeks simple moving average, and a 21 weeks exponential moving average. Instead of building that yourself, you can also search for this on TradingView. Bull market support bands works like a charm. The only but as I said, you need trending markets, of course, for that. So it's not going to work in a market that moves sideways. And Ethereum has the same picture. The only difference between Bitcoin and Ethereum, in my opinion, is that Ethereum tends to do more volatile swings. So when Bitcoin moves to the downside, Ethereum tends to over move to the downside. It's a bit like trading an already volatile asset like Bitcoin, but with even more volatility or with leverage ingrained. And here, for example, also on Ripple works like a charm. So if you are new to trading and you are looking, I'm not saying for an edge, but for a way to kind of get a feel of other markets where they are trading right now. Should they be trading there, or is there more potential to the downside? Is there more potential to the upside? What is the current market structure, and so on and so forth? Really, in my opinion, there is almost no easier way than this. And no, it's not in Ichimoku Cloud Zone, as I just said. Simple moving averages. Search for bull market support bands. Search for the standard deviation channel, and then you can very easy do the same. Same question for Dirk. What question? about how you got into trading. That would be a too long story here because I've been doing this for 26 years already. We'll do that another time to when I can share with you in detail how my journey has been. But I don't want to bore you to death for the next half hour that this monologue probably would take. What else? What are you guys currently trading? Share with us what is going on there. Anything we should have a look at to help you. Ichimoku Cloud. I think I've never used that one. I know I actually know some traders who are successful in using it, but personally, I've never used it. I'm going to scroll a little bit through the comments to look. Gold guys who have been looking extensively, of course, already here. Fabian has been making profits with short scalps on gold over the last few days. That's very brave, man. Now waiting for the big drop. Yeah, I've been waiting for the big drop also since we shot actually over $3,000 already. But seems like it's never coming. But congratulations. Of course, like this is contrary to what I said earlier in terms of don't make your life more difficult than it has to be. Meaning, like when we're in the trending markets, don't use a contrarian strategy. But that does, of course, not mean just because I give you the advice that the contrarian strategy here can not work. And it looks like Fabian has found a way to do it in a good way. So in a strongly uptrending markets to make profit with shorts. Nice. Very happy that it works out for you. What do we have here? Oh, God, the DAX. Of course, that question needs to come. Now, I'm not a DAX trader, so I very, very rarely touch the DAX for good reasons. I know nowadays the DAX, look at this again, like also deflected by the upper deviation band here. I'm not a DAX trader because when I learned my ropes with trading, so to say, back then, my mentor always told me, well, Dirk, with DAX, you can actually just trade early in the morning, so after it opens. Because the further we progress through the day, it's just going to copy what the S&P 500 future is going to do. And that was true back then. So I kind of got into not trading the DAX because I always told myself, why do I need to trade the DAX when the DAX is just copying what the S&P 500 is doing, and I can trade the S&P 500 also. I know nowadays it's a little bit different. It tends to have a life of its own nowadays more, but still kind of because I didn't really trade it the past 20 years, I'm like reluctant to add it to the things I trade. But it's just a personal thing, in my opinion.
Same thing with me for the ASX, the Australian stock market. So the only exclusion to that is when there's some kind of variance with like commodities, ripping or something, and then the ASX will like outperform. But yeah, same deal. I stick to the US indices.
And the performance driver for the DAX have been the defense stocks anyway, especially Rheinmetall. So it's also something I don't necessarily like so much, when you have like one stock in an index like heavily influencing the whole direction of the market. I know it's also a bit the same for, you could argue, for the NASDAQ and the S&P 500, like with Nvidia, Apple, and so on, being the ones that moved stocks in the past 3 years. But, at least you have it divided for the NASDAQ to 100 stocks. The DAX are 40 stocks, and 2 to 3 of them are very heavily influencing what the index as a whole is doing.
Yeah, exactly. Yeah.
Please
I heard you say Ichimoku clouds before as well.
Yeah. Have you used those? I never have.
A little bit in the past. They're very popular with Japanese traders, obviously, and Japan, the retail side is actually quite large, largest in the world as far as retail, which does actually end up moving things. So on Japanese related assets, they tend to play pretty well. So any yen type cross, I found that they're pretty good, less reliable on the other majors. Essentially, it's kind of a combination of EMA's Keltner channel, sort of all sort of mashed together with a few bits and pieces. So I often find on the other majors, you're better off just using those individual pieces, but they're still good. Again, I don't mind it as like a visualization type thing with the cloud. The primary way to trade it, I've always found, is best is the cloud twist, especially on high time frames. You often tend to pull back into that cloud twist, tends to attract. So, but yeah, I haven't used them too much for a while. Yeah, so you can see kind of where you've got your what do you call them? Your moving average sort of support bands, and you can see where that cloud twist, sort of where it's red, just under there.
Like here,
that kind of gives you like a good floor to sort of target. And then you can see from there, the forward projection is that you should sort of tap in there and then rally up again. So, yeah, I don't mind as far as that, but
why not? No, if again, it's like a piece of a puzzle. No, that should be your analysis. Like if that works for you, and you use it as another tool of confluence, for example, why not? Fair. Like I said, I always would be extremely careful with just using this as a single isolated indicator. I don't really know how this Ichimoku cloud thing works, like on a mathematical thing, but I assume, like you said, it's something with moving averages. And moving averages as a sole indicator always have a problem that they lack by design, of course, no? And so careful with just using that. But if you bind it into something like Confluence, I mean, clearly now, for this one, I mean, it springs to the eye, no? That if we kind of get into that part here, that this could be possible a turnaround then to go to the one plus one simulation again.
Yeah, so it's kind of like combining like sort of a bunch of simple exponential moving averages, Keltner channel deviations, blah 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 blah, all combined together to try and get the current, and then projecting where it should be sort of coming to, as you can see. But I will also say it tends to be better fitting to assets that go sort of more both ways rather than momentum type assets. So something like stocks, it's not going to be as effective on a currency where you've got either side playing, a tug of war, and it's a lot more back and forth. They'll do much better. Momentum type assets, it's less favorable. So, but yeah, I haven't really. I used to use them a lot back like 2014 to 2019. Not so much since, but we've had a different sort of market since COVID.
But it's true. Like it seems like that every couple of years there's like a new trend, and like this is like the thing you should do in techno analysis. And I remember on social media seeing a lot of posts back then on Ichimoku clouds. I don't even know if I pronounce it correctly, by the way. And so nowadays it's more like, what is this concept called again that we like to make fun of always here?
ICT.
Yeah, exactly. ICT. Yeah. I hope I didn't offend anybody in the audience now with that comment. And if I did, I don't care.
Yeah. Look.
But like back in the days, like early 2000, that was the time when this whole price action thing started getting big. So everybody was writing back then about bullish engulfing patterns, pin bars, and so on and so forth. So that was really, really big. And to my surprise, back then, this kind of has become standard practice nowadays. Which is, it's a good thing because it tends to work in the right settings. And I know some of the hosts here we have on the fibers use that for the analysis, like Victor, for example, being one of them. And obviously he does it very successful.
Yeah, exactly. Yeah, Henry. Oh, man.
Our certified chart analyst getting angry when we talk about ICT.
Have you sort of looked at, or I don't know, checked in on any of the Japanese bond market stuff.
You want me to talk about the worst currency in the world, at least when it comes to my trading experiences last year?
Yeah. I mean, over the past couple of days, we've had like, what was it, like a 6 standard div move? You know, we're just accelerating.
It's really accelerating.
And we've seen, we haven't seen that much reaction so far in yen pairs, which is
that would
also
be
interesting.
Something new if dollar yen, for example, suddenly starts caring about what the yield spread is doing between Japan and the USA. But I mean, look at this. Do you remember, like not long ago, we were like talking about, well, we've seen like 1% in yield for the first time in what was it, like 14 or 15 years? Now we are at 122 for at least for the 2-year yield already in Japan. And so what LJ is basically talking about is we see this in Japanese short maturities or shorter maturities, so 2 years treasuries, and we see this in US treasuries. So they are slowly but surely moving closer together, which should at one point translate to the unraveling of dollar yen, meaning the yen becoming, in contrast, in comparison to the US dollar, stronger again and moving somewhere to the area 140, 138, 130, maybe even below that. Because it just doesn't make sense anymore to be in that carry trade, because the reward for the risk you have to take them is not large enough anymore. This trade made, of course, more sense when Japanese yields were below 1% and US yields were at 4.5 or 5%. And now that they are coming closer together, it should not make that much sense anymore. But like we said last time, I kind of think it's like this dilemma of, okay, what else to invest in? Yeah, there's gold, there's stocks, but when it comes to the carry trade, there is no other carry trades, at least not in currencies that are liquid. If we talk about something like dollar against Turkish lira or South African rand or something, that's a different story. But institutions do not want that trade usually because, like in Turkey, the interest rates are high for a reason. And so it kind of feels for me there's like, for lack of diversification possibilities, institutional still flock into the dollar yen carry trade.
Yeah. So my question is wondering when this is going to spill over and hit a level that is too much and causes too much stress, that liquidations have to start happening, or even just a rotation in general, right? Because this is we're seeing global bond markets getting pushed up now, right? So with the Japanese yields coming right up, it's pushing that up across the board, right? So this then comes back to that debt refinancing type situation. Same with the US, and this is what they have to roll over the next years, and it's gone up another huge chunk.
And if I may add to this, it's very interesting. Also, if you look at what is going on with Greenland right now, because the EU already has said, well, if you continue doing this, we might as well get rid of all of our US Treasury bills.
I was just gonna.
Exactly. Europe is the largest holder in the world of Treasury bills. Now, not like the governments or also private companies, pension funds. Exactly, a Danish pension fund already sold 100 million treasuries. So this would push the US yields higher, and higher US yields is something the USA simply cannot afford. But
yeah, and then
explain it to somebody like Trump, he's not going to understand it.
Yeah. I mean, with the Danish, obviously, that's a pretty obvious one. You got the stuff going on in Greenland, so it's also a bit of a hey, step off. But eventually, this starts to create, it derails the whole trade tariff war thing, everything Trump wants to do since coming into the presidency. And at some point, does this, again, him continuing, despite this stuff going on, continuing to sort of offside certain countries that have been allies, and he kind of got away with it with the trade war, the tariffs, and everyone went like, okay, we'll just whatever, put up with it. But if he keeps pressing this, it seems like, very much there's going to be a bite point where it all has to get walked back, or just more infighting or chaos or whatever. So I'm wondering, as far as things that will derail the market, etc., if it will ultimately be the bond market being the kind of canary in the coal mine to watch.
I mean, it's the largest market in the world, no? So it's a good signal always for the overall health of the world's economy here.
Yeah, because it comes back to the gold thing, the continued rip in gold, because you got central banks all moving away from their bond holdings as well, and shifting more and more into gold for that reason, because of that uncertainty factor. And like we've said for a while, bonds kind of in the bin. Don't like them as a defensive asset. It's all a big mess. Highly primed for repricing across the board, and gold, once again, is the only safe safe place out there. So
gold doesn't care anymore about risk on, risk off. It's always risk on. It doesn't care.
Yeah. So for any of you guys wondering what's going on, definitely check into some of the stuff at Davos. Keep an eye on Bloomberg, that kind of thing, if you want to kind of learn more about what's going on. And they have some of the there was a good interview the other day with Ray Dalio. He always, they always drop him in there every year, and he gives his 2 cents. But he sort of explained it pretty well, as far as we have the trade war stuff, but there's also a capital war, right? And we've gone back to that capital type war as well. And even with central banks starting to divert away from various fiat currencies, or change up the basket there overall. So gold on the run. I think 6K is going to be
next week.
A lot sooner than
Monday, when both of us are streaming again together. 6K. No, maybe not 6K, but 5.5.
No, of course, no, but we'll definitely be getting there much sooner than much sooner than the case would have been 4 weeks ago.
Yeah,
just before the new year. So wild right now. But guys, definitely, please do like and sub to this to the stream. So any of you guys that haven't thrown us a sub yet, please do so. Much appreciated. We're almost at 100K, so getting very close now. What was it before, Dirk? What did you say it was?
95,500. Let me
95.5.
The number has changed. 95,500.
I want to try hit 100 as soon as we can. Especially be awesome to see with the 10-year anniversary of the Fivers.
Right.
Both those things coming together. And big giveaway for you guys at 100K as well. So do like and subscribe. How are we doing? Would you do analysis on US 30 pre-New York? Yeah, sure. So I will say US 30, I always tend to stay away from the Dow. I tend to trade preferably NASDAQ or the S&P. Obviously, the Dow's not bad. They're going to move pretty much the same, but similar to what Dirk was saying before, with the DAX, you've got a much smaller select number of companies, and the index as a whole will tend to follow the NASDAQ and the S&P, right? Then you'll have some deviation on occasion with the heavier weighted companies there. So what's in the Dow today? What you got, like a bunch of the big banks and that kind of thing still in there, payment processors, that kind of stuff. So when you've got, always keep an eye out for earnings and that kind of thing from them. But we will look at the Dow specifically. So similar deal to The NASDAQ, I think when we were talking a bit ago, I think 45 minutes ago or something now, we are looking as though we are coming up to some kind of reasonable support / buy entry through here, especially if you believe in the further upcomings of the market this year, both from a long-term hold type standpoint. This would be a pretty neat buying area through here. So you've got these previous highs. You've come back into this 200 moving average. This is on the 4 hour right here. And our good old 2 standard div band, we're right at the extent of that. And so you've got this cluster of what we're saying, confluence coming into here. So this is not a bad idea as far as a long through here. I would be looking at something like long off this 200, at least to come up and close the gap. You could run the stop just below the bite point back from, what was that, first week of the year, back on Tuesday. So that would be just under the highs that we made sort of coming into the end of the year. We made a new marginal high just before New Year, then trailed off. So you've still got that positive momentum as far as, like we talked about a few times here, higher high, higher lows coming through here. This would potentially be your next higher low for a new run right up. Now, if you want to play it short term, you look to sort of close the gap if you're looking for this week, next week, or else if you want to hold a bit longer up to new all-time highs. The caveat to that is obviously going to be Trump. He is speaking today, so do be careful with the whole Davos situation, geopolitics going on everywhere right now. That would be the piece to be aware of, because that's obviously what we got this gap down here from. So that's very much the driver right now. So if that alleviates, that would be a perfect trade through here.
For me, the thing is I don't trade the Dow Jones at all, because it's a price-weighted index, meaning it's like the companies within this index are just measured by their and weighted by their price. This is why you have, for example, Goldman Sachs with, I think, 11 or 12% having the most influence on where that index goes. Contrary to this, for example, the NASDAQ and the S&P 500, they are market cap weighted. So the larger the company is by market cap, the more it influences also the swings of where that index is trading, which is a more realistic approach, in my opinion. Why should a company like Goldman Sachs, I mean, it's a big company, have more sorry, oh God, I'm losing my chain of thought today all the time. I think I didn't have enough coffee. So why should a company like Goldman Sachs have more influence on where the index is than something like Nvidia, which is also in the Dow Jones? And this is just the case because the Goldman stock share is somewhere at $900 or $930. So there's more influence when it comes to price weighted.
Yeah, exactly. So same deal. That's why I prefer the NASDAQ and the S&P. But as far as if I was looking at the Dow, either that higher time frame trade that I was just sort of scoped out before, that or else on a shorter time frame, if you're looking at current entry where we're sat, that's the kind of makeup I'd probably look at. So this recent low up towards the highs from yesterday, which comes into this around the general support zone from this higher cluster that we basically broke down from, right? So that's probably where I'd be looking at if you were interested in a long. I think shorting further from here, definitely possible, but it's going to be contingent on that further ratcheting up of rhetoric from Trump and the geopolitical situation. So a lot of that at this point is probably in the price. People are very aware of it. Any kind of further inflammatory remarks are probably not going to be as heavily weighted in the market because, people get saturated with it, right? Just like how last year, initially the trade wars were going ballistic. After a while, Trump says something, everyone's like, whatever,
Yeah.
So
it's like, I'm going to turn my attention to the next thing.
Yeah. So once those things start to sort of mature, it's often good to then look at unwinding them and markets sort of coming back into some kind of balance. So I would prefer finding a low point rather than just entering here. We've got the Davos stuff. You got New York market coming up. So I'd probably wait for a lower entry ideally, but then I'd probably sit on the long side preferentially at the moment.
Yeah, I mean, what would be the next escalation phase? That would already US troops, trying to invade Greenland.
Yeah.
And I still refuse to think this is going to happen because we heard also already from Republicans in the United States that this would be reason to impeach Trump if we would do that. Not coming from the Democrats, coming from Republicans.
Yeah, exactly. I think when we had the Venezuela thing and it was sort of just more echoes of Greenland and it was just talking rubbish, then it actually stepped up to, I'm doing Greenland, right? And before he started on that train, I remember we were talking about it and I was going like, I don't think that'll happen. That's a bridge too far. Undermines the whole Europe NATO thing, defense spending. It would just be a terrible idea. And just like you're saying, I think it'll be the pressure of the party going like, nah, man, step off. This is too much.
Yeah.
So, yeah, because it's weird. I don't think anyone quite gets the end goal of it. There's no point. Same with any of the responses from other countries. They kind of go like, yeah, let's not do that. But there's no like anyone trying to give the reasoning as to why the objective is a bad idea, because no one knows what the objective is. Everyone's kind of just like, no.
I mean, that's the thing. Like, let's dial back like 6 months or whatever, and somebody tells you, in January of 2026, there is not an outlandish chance that the USA is going to invade Greenland. You probably would have said like, yeah, right, okay, you go back to the mental asylum you broke out from probably. But this is the thing with Donald Trump. There is like always a new level of crazy to be added with him.
Yeah, you can't count anything out. That's for sure. So, yeah, man's wild. I bought a hypergrowth account. I'm up 3% now. What is the best approach to trade hypergrowth account? I would say if you're up 3%, you're probably doing it already. I guess the next question would be, are you up 3% in one day or one trade or something? Then maybe, dial it back a little. But however, I mean, it sounds like you're doing it right. There's, as far as the best way to approach it, just like any account, just keep your trade, your risk management in check. Be wary of the daily drawdown, total drawdown, and then just take it steady. It sounds like you're doing pretty well, to be honest. So,
yeah, like you said, as long as this 3% were not from one trade, because that would probably translate into that you're risking too much per trade and maybe got lucky. And so, yeah, but it's like it kind of dials into the question we had earlier from the person with a 2% drawdown on a funded account. Just because you're up or down at the moment doesn't do not change anything, If you are up 3% and this is the result, I don't know, of a month or 2 or 3 of trading, whatever, then you're obviously doing something right. And if you continue doing it, you'll naturally reach the stage where you are funded or where you even get more capital, if you're funded already, that is. So don't change it. That's like the worst thing you can do. If you have a system that works for you, don't change anything just because you are up or down a certain percentage, or typical also, when you have suddenly a series of trades that goes against you, you have like 2, 3, 4, 5 losers in a row suddenly, that you start doubting yourself. Don't do that. Keep a journal, keep track of your trades, and always see like the latest results of your trading, tie it into the bigger picture, so to say. Is that really an outlier right now, or is this something that is bound to happen if you look at 1,000 trades?
Yeah, precisely. I was just going to say NASDAQ here is actually looking pretty
Yeah.
all right.
Yeah, I agree. Yeah.
Right on that 25K, and then that's right in the middle of the price distribution for today for 0 days to expiry options. I think this is looking pretty good for a bit more risk on come back. I think the Japanese bond market thing has sort of calmed down. Trump kicking off, people have kind of gotten over it. There might be one or two more, side comments this evening, like I was saying. So do keep an eye out that you don't get washed out, on a candle drop only for it to turn right around, right? But I would definitely be taking the reversal here. So.
Yeah, I agree. I mean, that's basically what we said in the beginning of the stream, no? That this area around 25,000 looks pretty decent. And you have a lot of upside potential, can keep your stop not rather tight. Of course, there's always, like you just said, LJ, the possibility that we have like a crazy wick to the downside and you get stopped out, and then the market does what you expected it to do. But things like this also happen. I'm sure if you're trading gold, for example, this happens sometimes. It's frustrating for sure, but things like this happen. Nothing you can do about it. That's the price we pay for trading volatile assets.
Yeah, exactly. So I'd have a target somewhere between 25,300 and 25,400.
Yeah, nice.
Or 450, somewhere around there. That'll probably be the target zone for this guy.
So that gives you leeway of like, 150 points around about to still have a good risk-reward ratio.
So, I mean, down at the base level, that's still a 2.4. Up to the tops, about a 3.5, so it's quite good.
Yeah. Keegan asking, I'm currently on phase 2 on my 10K high sticks and lost about $700 due to FOMO trading. Any advice how to avoid it? So first of all, congratulations that you're on phase 2. That's an achievement, of course, already. So you're already doing better than most. And you should be proud of yourself. FOMO is very, very difficult. The thing is, over the years, I kind of ingrained myself to become very careful when I hear everybody screaming into the same direction. For example, this is also the reason why I've rarely traded gold the last couple of months, because I always felt like, okay, it's too much now. Like people are queuing there to buy physical gold. It's like too much. Of course, gold is proving me wrong right now, but I kind of have the idea if I suddenly start buying gold now that I'm going to pick the absolute top, because I've kind of fallen for the FOMO in there. The only advice I can give you is to really sit down and analyze for yourself before you enter a trade. Am I doing this because I have a fear of missing out on this specific asset, on this specific trade? Or am I sticking to my analysis here? And if you're sticking to your analysis, then it's not a FOMO trade, in my opinion, because when you're doing what you are always doing, and when you're doing what made you pass the first evaluation phase for your account. But it's difficult, I agree, because we sometimes as humans like to trick ourselves, to believe, oh, it's not really FOMO. I did my analysis very correct. You see that over and over again, especially, for example, also in cryptocurrencies. Not as strong, actually, surprisingly. This cycle, the last cycle, the bull market was rather calm from retail side. But I mean, I remember in the past when the initial coin offerings, where everybody, just bought whatever Shiba Inu, Doge, because of stories of people that turned $500 into hundreds of millions of dollars. And it's hard not to fall for that. But when it comes really to trading, treat your trading decisions as business decisions. And if you run a retail store, for example, you are selling shoes, and maybe there's a model that's like very popular at the moment, you think "Hey, it's a smart idea to have it stock up on that model, but somehow your clients do not want to buy it. What would you do? You probably wouldn't order more of that, of that same model. But somehow, when it comes to trading, people, beginners, also experienced traders tend to do that.
Yeah, exactly. I'd say FOMO is hard because you can get lost in the source of being on the charts, being active. You're like, oh, you want to make it happen now. I think one of the good things is always anytime before you start your trading day, also periodically through the trading period, whatever you've set out for yourself, is to sort of take a slight pause. You can do this with what I've often recommended to people sometimes when they keep falling into it is set like an alarm on your phone that goes off every hour or something, which just says like, check in, or like check in with your strat, right? So it allows you to pause, really think about what are you objectively trying to get out of trading, and double check that your currently what you're doing is actually in line with that. Because the thing is, there's no rush, right? You don't need to do it all today or tomorrow. And sometimes life gets in the way and there's pressures and you might want it to happen. But normally that's the way that it won't happen when you're trying to force something. So extend that timeline, take the reasonable approach. And also, as far as you scale out how long you expect to actually take to pass through the phases, extend that timeline, and you might go, okay, it's a month or it's 6 weeks or 8 weeks or however long, and sort of break that up into pieces and put it into like daily goals, right? And then often a good way is to then go reduce that in half and make that your target, because then you'll have some days that you'll do more, some days you'll be behind a bit, but it sort of averages out. So that's one of the ways to do that. And then it's really good because then you have a good day and you smash right through that and you're like, awesome, I just sort of knocked out 3 days of that period. And then if you do that again, pause, reset, reassess, come to it fresh. Like each day is a new day. And if you continue that, then you should be able to break that FOMO cycle. And if it's really, really hitting you, that's when you can break it down. Instead of each day, even do it hour by hour, and try and get that reset. That would be my approach.
Yeah, and set realistic targets. So it's don't fall into the belief that you need to pass evaluation within 2 weeks or something like this. It's not realistic. Always remember that like the best performing hedge funds out there over a period of 30 years, they average around 14% per year. So if you come close to that target already, you are amongst the 0.01% in the world. Having a target of several 100% per year or even per month, like a lot of influencers on social media are suggesting, for example, it's maybe if you're lucky, it can happen once or twice for you, but over a long period of time, you're just going to blow your account with a very, very high probability.
And you can do bigger numbers than that because you're trading. The thing to understand is the difference between it and how you're doing those big numbers, which is typically because of leverage, right? So if you compare the same comparable leverage to some of these big funds or hedge funds that are doing 14, 20, 30% in a year, they probably also get 5 or 10 times less leverage. So you might still be able to knock out 80%, 100% or something in a year, but understand the reason that you're doing that is because of their leverage. Now, that also means that you can also get cleaned up much quicker as well. You can, fail, you can lose everything much quicker. So leverage can either be your best friend or it will be your worst nightmare. So definitely always make sure you keep that in check as well.
Remember Lehman Brothers still from 2008, the investment bank that collapsed and caused the financial crisis, the banking crisis back then. Their books were leveraged by 1 to 10. And ask yourself the question, am I smarter than the people who worked at that investment bank to manage something like a leverage of 1 to 50 or 1 to 100 or 1 to 500 like some Forex brokers out there offer? Just because the leverage is there doesn't mean you need to always utilize it. Actually, I don't really care about leverage because my approach is always, this is like percentage what I want to risk per trade. If that translates, of course, then into me having to use leverage because maybe the stop loss is very tight, so I need a bigger position size, and that's something else. Then it's nice to have, but not per se, just because there's a leverage that potentially could be used, like 1 to 30 or 1 to 100, that I feel like that I force myself, I need to utilize that on every trade now.
Yeah, exactly. And obviously those levered funds, the big funds, they're in different assets. The thing when you lever up that kind of money, like there's liquidity problems of getting out. These are part of the reasons why they don't, because you can't exit the trade. Now, us as retail traders, we're not trading any kind of size that is that big that we can't get out. But still, the point is to still keep that in mind, and focus on that downside. So you want to go from being like a retail trader to an institutional risk manager is kind of the mind frame, the mindset that you want to take into trading. And if you can do that, repeat that 100, 200 times in the market, you'll do very well for yourself. So
if you reach a point in time in your life where you have to think about that you cannot scale your strategy anymore, then you made it already.
Yeah, exactly. Yeah. You've got that's that. It's the best problem to have, right? Yeah, exactly.
Then you probably have to think about retiring slowly.
Yeah.
But of course, a hedge fund, with like billions of US dollars in assets under management, they are not going to trade just one strategy. Most of them, at least, because then you very quickly get that scaling problem. Although, like some of them that are trading the bond markets can do so with position sizes of hundreds of millions, it's really surprising how well the bond market or also currency pairs like euro dollar can absorb liquidity, how liquid they are, really.
Exactly. So FX markets are probably and bond markets are one of the few places you can actually do that kind of size, obviously. So good old George Soros back in the day as well. All this stuff. So
yeah.
Can we look at pound New Zealand dollar? Yeah, sure. Give me 1 sec. Off a cliff. Interesting. Let's go to the daily. Okay, so wow. Starting from the daily, I guess we've cracked these lows. That was from 5th of December. So I'd say next target is definitely right now, right down to the 200-day moving average. This looks very, very bearish. I would not be trying to reverse this or anything right now. So if we then crack down to lower time frame. So what we're saying, took a trade at 2.044, TP at 2.073, stop loss 2.0242. Wait, 2.0 or 2.2?
I think that's a typo, probably, no?
Yeah, surely it must be. So 2. Check those numbers. Or are we looking at, is this not pound New Zealand dollar? Is it a different something else? Because that's definitely a ways out of the market, right? So revise those numbers and then I'll check. But either way, in summary, I would definitely not be trying to catch the bottom of this right now. This is looking very short and looks like on a straight trajectory, right down to 2.2840 at least from here. So yeah.
Yeah, but that kind of looks like, at first glimpse at least, that we could see a break of market structure here.
I would definitely say that's your immediate first point of call. And then if not, you could even, if this doesn't find some kind of base there, it's right down, 2.23 through here. So
Oh, it was Euro Kiwi.
Euro NZD. Okay.
That makes more sense.
I'm going to assume Euro NZD is probably pretty similar. Yeah. So similar deal here. I mean, we've had the break through there, right? This is my freehand drawing through here, freehand trend line. But you can see we came through, broke through that, came up, basically tested the underside, and we've kept coming off. We had the wick up through there. Today it's fallen right back. So I would say very similar deal. We're probably headed much lower. I would not be trying to long this at all. So if you are currently long, like you're saying, I would probably look to jump out as soon as you can. Maybe any kind of move back up here just to 2.060, then I'd probably jump out. I wouldn't be looking for 70. I would say this could very easily just collapse. So,
yeah. I tend to agree, although I must say I don't trade the New Zealand dollar very often. Usually I like to keep to the Aussie dollar if I'm trading in Oceania.
I'd say that this level here probably ends up capping price. This is looking quite bearish, and you've got essentially a double top through here. We've broken back down, broken below those lows, and yeah, not looking amazing.
At least not for if you're long, like you said you are. Set for Ethiopia is telling us now I cannot pass phase 1, keep blowing accounts because of time pressure. And I've honestly lost confidence to trade. Any advice would really help. Well, it is already, I think the advice is already hidden in your statement there. Time pressure. It's exactly what we were talking about earlier. If you have other things, that are going on in your life that you need to concentrate on, for example, having a normal job throughout the day, and you kind of keep thinking to yourself, well, every now and then I take my mobile phone out to place a trade or whatever. It's not going to work like this. And you have to find a way or a time of a day where you do not have this time pressure. And it's possible to do that with, amongst our hosts here, one good example I can think of, which is Ashley, who is exactly doing that, who has a normal job that she's doing. So what does she do? She decides in the morning, if she sees some trading opportunities, she places her trades on her mobile phone, by the way, and then offers and lets the trade run with a predefined stop loss and take profit. So it is possible. But you have to integrate trading into the time of a day where you do not have that time pressure, because otherwise it's not going to work. That's the thing about trading, probably what trading shares with almost everything else in life, that you cannot force things. If there's other stuff going on in your life, you are going to probably not become successful as a trader.
Yeah, I would say, there's no, just like Dirk was saying, time pressure. If there's time pressure, it's probably because you're putting it on yourself. So I'd ask, why do you have this pressure? Is it because you feel like you need the money for something else, whatever, which can be understandable, depending on someone's situation. But if it's because you just want to do excess things, like a lot of people want, where's my Lamborghini or where's my Rolex or something? Like you don't need that tomorrow, right? If you do well enough in markets that you can get to that status, that's great. But don't try and force it. Don't try and pressure it. It's not common as much as social media or something might make it appear to be. So step back, and just like you're saying, Ashley is a perfect example. She works a regular job. She sort of takes her 2-3 trades, focuses on 2 assets, has a very particular exact setup she looks for, and then takes those trades, and then that's it. And she often does it, like Dirk was saying, she does it all off her phone, and it's often while she's walking her dogs.
Exactly.
Right? So you definitely can balance these things together, but you just got to be particular with outlining that from the beginning, and then integrating that into your life. So. Okay, so don't have a job, you're at university, but you drop out because you saw a little bit of profit, but reality is harsh. Yeah, so it's always a good idea not to drop things too quick just because you've seen some profit in the markets. I mean, I'm obviously an example. I started at uni and made some money and then decided to defer and then not go back. But I mean, I made 6 figures, so it's I didn't make a couple dollars. Like it was okay. This is I also then when I started making that, I went, okay, is this by chance? How am I doing? This is going too well. I got to make sure this is something, or if I've just stumbled onto a hot track, hot hand fallacy type thing, and it's all going to go away, right? So I made very, very sure that this was something before dropping that. So similar deal if you got a job, you always want to have something else lined up before you just leave your job and expect you're going to hop into something else. So I would say the same thing with trading. Now, if you've dropped out, potentially reconsider not fully stepping out on that yet until you find deeper success with trading. But if that is the case, it sounds like you're trying now to force it as far as the time pressure because you've dropped out and you feel like I need to make this work. If that's the case, if you do want it to work, again, you will have to slow it down. And now, arguably, because you've dropped out of uni, you might have some more time to do that. But yeah, slow and steady wins the race type situation.
And now I don't know if this is the case for you, but if you have like something going on there that you need to be profitable now because otherwise you cannot afford rent or buy food or whatever, that's also not a good place to be in, because that will definitely make you do bad trading decisions. So the trading capital you have there, be it on a funded account, be it your own capital, in the back of your head, you should always ask yourself, if I lose that capital, is this going to put me in a spot where I cannot afford rent, food, and the basic necessities anymore? If the answer to that question is yes, then you cannot trade. It's impossible because you always have a devil on your shoulder that whispers into your ear, what if this trade goes wrong? Then I cannot buy rice tomorrow or whatever. So this is also why I like prop trading challenges, specifically with the fivers, too much, because it takes that out of the equation. Yes, of course, there's an upfront fee that you need to pay, but it's not that high. If you have the chance later to, if you're funded and doing well, and that you can have several hundred thousands or even millions of US dollars that you are trading in, and that are not your capital, but you keep almost all of the profits. I think that's a little investment, So the gist of it, in my opinion, really is like, if you are dependent on being profitable every month because otherwise you don't have food to eat or money to pay rent, then you shouldn't do trading. You need to take care of that first. And if that means, that you have to stay in university for a little while longer, or that you have to work a job, then be it so. Then you need to go a different way. Like, for example, we have had Ashley here as an example now, like she is doing, making sure, there's a time in the day where I do my trading. But at the other time of the day, I'm not thinking about trading anymore. I'm concentrating on the stuff that brings the food onto the table. And that also doesn't, of course, guarantee that you're going to be successful, but you at least, get that off your back. This dreading feeling of, I need to be successful, I need to earn money with trading this month, otherwise it's all over for me.
Yeah, you never want to be down to that last dollar where your only option is to throw a haymaker to make it, right? It's think of it just like boxing. If you're out there just trying to swing bows, you're probably going to get yourself knocked out, right? And so the same thing in life, in trading, with the job, with whatever. You got to sort out the foundation. You always want to build stuff off a strong foundation, just like a house, just like anything, right? Get that foundation in check, and then you can start, the growth type aspect there. I think we got some guys in the background. There was a final question here, though. As far as scalping, what's the best pair to trade. And for a small scalp, what is the best pair to trade, like holding for less than 1 hour? So in terms of scalping in general, you want something active, sort of a good amount of volatility. So that can be any of the major currencies. It can be the NASDAQ. Any of this stuff you can trade. You'll have to go down into the lower time frames, typically on the 1 minute. And then the next portion with that would be to remember basically to trade them at the most active times. So this is often at the start of a new market period. So whether it's the London Open, New York Open, that kind of stuff, when most of those flows sort of come through, that's when you'll typically do the best on whatever asset it might be.
And
so
also
trade around the most active times.
And also consider the cost side of things. Like scalping, if you are planning on doing 30, 40, 50, 100 trades every day, even a small commission, like $4 per lot, like the Fivers here, will have a negative impact on your trading results overall. So when you scalp, you kind of often are forced to end up in a situation where you trade with an R probably below 1, which is okay, if it works for you, if your success rate is high enough, but it's not what I would recommend starting with, honestly speaking. So depending how experienced you are with trading already, if you're really just a beginner, I wouldn't recommend starting with scalping. Look more at daily 4 hours, 1 hour charts in a way that LJ and I demonstrated here earlier, market structure, and concentrate just on a handful of pairs there.
But an example, this is on the NASDAQ right here. You could take that as a scalp trade. That's basically a 3-to-1 up here, retracing back into the moving average and around the highs from the previous structure through here. Stop below these lows, so long as this is forming like a sort of short-term channel, and you'd be looking for the break from there for us to go up. That or else sometimes people might want to enter on that break and trade something like that. Right, so that would be an idea of scalping this kind of thing.
See, we should have bought earlier 25K. But we were all talks, no action.
And so just like you saw that bar come down there, that's the thing with scalping where you can then, this can get taken out pretty easy. So you've got to be, pretty quick on the trigger, pretty active. You've got to be focused. Make sure you're actually sitting here very, very active, not, place a trade, walk off type situation. So.
Can you believe it has been already 2 hours? Time to hand over to Richard and Wilhelm, who are already waiting in the background.
Hello.
Hello.
Richard, how's it going?
Good, and you? Just let me know, is my mic very loud?
Well, hello there. No, you're fine.
Am I fine?
No, it seems fine.
I'm not at my normal setup because we don't have electricity.
I was going to say.
Oh, really? Oh, is it still out?
Yeah, we've had some midnight shoppers, and the midnight shoppers decided to take some copper cables. Very, very, very necessary for us to have electricity. So,
I can kind of understand that they did this looking at the copper prices at the moment, yeah.
Yeah, so you can't fault them. They're copper traders at the moment. So the copper trader midnight shoppers left me high and dry this morning. So I'm currently at my brother's house using his setup because they have solar. So
man, we are really around the world here today. You know, we have Australia, South Africa, Hong Kong, Berlin. Wow, it's just like somebody missing like that is on Hawaii,
we're a
or the USA,
song.
Canada. Super international.
We're definitely a Pitbull song because we're Mr. Worldwide at the moment.
We all need to come on with like bald caps. Dirk doesn't need one, but the rest of us.
I'll get a Wickman.
yeah. Dirk can go the other way.
Suddenly I come on the stream like long hair, long blonde hair. Oh my god.
Oh, that's amazing. All right, guys.
How's the market been? Because I've seen nothing. I literally came to the market maybe half an hour ago, and it's been trying to set all of this up. So I haven't looked at anything.
It's not been too bad overall. I've sort of had the trades from early on Monday just playing out. As far as today, it's been a bit, soft. Obviously, unless you're trading stuff like gold, still ripping, silver still ripping. NASDAQ is seeming like we're going to form some kind of base through here, or maybe one final dip lower, and then a potential nice buy, some kind of buy area down here. But yeah, that's sort of what I'm looking at the minute.
So similar to you on the NAS, I'm looking at buys on NAS. It's not quite ready for me yet. I say that yesterday it wasn't quite ready for me, but I really wanted to be buying. US 30 for me has just been, it ripped me apart a little bit last night. I went up to about 300 bucks up. And then this morning I woke up to like 100 bucks down. So on my other accounts, I have taken a similar trade. I'm about 1,000 bucks down. I also got filled on not so great of an entry on some of my other accounts who aren't with the fivers. And I looked at it and I was like, that sucks. I was like 300 bucks up, which means I was like 700 bucks up on my other accounts. So I was floating probably close to about 2K last night. And then, yeah, I'm about like 500 bucks down floating now across all accounts. So I'm like, bruh.
That's
The market giveth, the market taketh.
Yeah, exactly, man. Exactly. So that's my US 30, which I placed last night. Gold is still doing weird things. So it hit my stop loss criteria last night. So I had to take out, and then it just ripped. I was like, come on, really? I was like, really? We're gonna? That's how we're gonna play? Like, that's how we're gonna be now? Is it? We're just gonna like hit my stop loss criteria? Am I gonna have to trade with no stop loss? Is that what you're trying to say to me, Gold? Is that how I'm gonna have to trade you?
Yeah, the gold is absolute stormer. Still,
LJ,
so.
I don't want to look at it, mate. LJ, I don't want to look at it.
All right, guys, I gotta make a move.
Me.
Going to see you again next Monday. Have fun, Richard and William, and thanks for streaming with me, LJ. And yeah, have a good and safe rest of the week, and always keep in the back of your head that we have something going on in Davos this week, and not only the Orange Gentleman, but other leaders of this world can post something or talk about stuff that can very quickly lead to markets not doing what you expected them to do.
Yeah, exactly.
Bye-bye.
Stay safe. See you, Dirk.
Dirk, have a good one, mate.
Of information.
I'll have to jump out in a sec as well. But I just want to say, yeah, Zed, no worries, man. Glad to help. Hopefully, some of that helps you along, and you can sort of figure out the next best approach. So, yeah, definitely tune in and keep us updated as well. So, yeah, with that said, guys, peace out from me as well, and I will see you guys tomorrow. Ciao.
Cheers, LJ. Have a good one, mate.
Ciao. Nice one. See you later, LJ. Have a great one, bro. Well, hello there, Mr. Butler.
What's up, mate?
Well, hello
sorry.
there. How you doing, man?
Sorry, today has been an absolute roller coaster for me. So,
bro, it sounds it. Like, tell me, what did you catch the midnight shoppers? Did you chase after them with your purse and wave your?
So basically, the midnight shoppers did it like at midnight when I was like in the middle of my, my beauty sleep.
Catching your dreaming about profitable trading strategies.
Yeah, just like, another TP hit, TP hit, typical trader dreams. And it's so hot here. We generally sleep with the fan on, and the fan goes off. So I'm like, okay, maybe there was just this little trip and whatnot. We're okay. Don't worry about it. And then I go back to sleep. I wake up in the morning and the fan is still off, and I was like, that's not good. This is not a good thing.
Yeah, it is not a good sign.
So I get up, I go to the gym. I'm like, okay, fine, whatever. It's, the power is still off. Check like all of the socials, check all of the municipality, like any of their information, nothing. Dead quiet. Nobody said anything. I was like, okay, fair. Fair. Go to the gym, go and have an exercise. I'm de-energized. I'm not, not exercising all that well. My body is still stiff. So, okay, come home, power still off. And I was like, oh no. Oh no. I'm streaming today and we don't have power. Finally, we get the feedback from the municipality that, hey, listen, the ring feed was stolen last night and they can only help us in the later in the morning. This is good news. This is good news for me.
Yeah, brilliant.
Very bad news. Anyway, I've got other stuff.
Mate, these things happen, man.
Yeah, I mean, it's one of those things. It's just, I'm just, it's just like,
there's nothing you can do.
Where you're like, okay, what now? What do I do now? So I haven't looked at the markets at all. I had a trade last night. I haven't had anything since. So it's I don't know. It just feels like today has been, it's like everything just shifts to one side, and you don't want to be on that one side. So you can see, like, even the lighting, like I look red. Why do I look red? Like everything looks just red.
Fair.
Not red.
You do look a bit red. You do, yeah, that's fair. You do look a bit red.
Everything just looks red, and I'm not red. So it's just the
You're trading. Your background almost looks as boring as mine, but at least you have an excuse. You've got a blurred background. This is real.
Yeah, I've got a backdrop here. But the backdrop was I didn't have a time to clean it properly, so I decided, you know what? Let's blur. Let's put a blur on.
Blurry.
I think a blur will work.
Yeah, man, I don't blame you. Well, I mean, the Wi-Fi at the moment for me has been a bit hit and miss, but recently it's been perfect, so I can't complain too much. But today it seems a bit on and off, so which is a bit frustrating. But hopefully it can keep us going now for an hour and 20. If I can have a solid hour with no interrupted Wi-Fi, I'm gonna be happy. If I have to like drop out after an hour, and just cut it short by half an hour, that's fine. But as long as I can get a minimum of an hour, and I'll be happy. So it seems okay at the moment. My trading yesterday, so gold, like I said earlier to LJ, gold hit my stop loss criteria. I ended up taking out of the trade. In fact, if I just bring my MT up, can you guys hear me okay still?
Yeah, you sound fine.
Yeah, that's okay. So if at any point that I don't sound okay, just holler at me and I'll see what I can do. There we go. So this is gold. Gold on the, was it the 5 minute I took the trade? I believe it was. Let me zoom out a little bit. Here it was. Yes. So like I said, I think my hard stop loss was under here somewhere. But I had a discretionary stop loss under this level here because I thought if it breaks and closes, now I didn't mind a wick, but if it closes under this level, I'm not going to be too happy. Sorry, this internal level over here. And then it did. It came all the way down and sort of came and closed really bearish just here. In fact, if I try and zoom in a little bit. There I am. So as you can see here, so this level here came back down. If we wicked into this level, I would have been absolutely fine. But is the way we close really like super bearish strength into this consolidation zone. I thought, you know what, I wanted more of an immediate reaction than this. This has hit my stop loss criteria. I'm out. I'm fine with this. I'm done. And then I took out. It came back up a little bit, and then it just dropped. Now it dropped under this, broke and closed. And I thought, okay, fair, you know what, maybe it's just going to reverse and head down in the intended bearish direction, have a further, deeper pullback. Cool, so be it, I'm off to sleep. Turns out, no. It decided to completely head up in my intended direction. So I was like, oh, for God's sake, typical. This could have been an easy 1-2% gain. Easy 1-2% gain, which would have meant that I would have come back to break even. However, coulda, woulda, shoulda, screw it. It's gone in the journal. I'm done. Now, US 30. I thought at least US 30 looks good. At least that's doing well. Well, have I got news for you?
Yeah, I kind of saw it. Thought, ooh,
US 30 was doing brilliant. We were about $300 up, just around 48.10, or about about $300 up. And then I woke up this morning to about 100 to $200 down. Then we moved back up to about break even, and now we're sitting about $150 down. So I'm just wondering, let me have a look at swaps. I paid $6 in swaps. So I'm just wondering at which point over the next couple of weeks are the markets going to give me a bit of a break? So until the markets decide to give me a break, I'm currently in US 30, which is about 1.5% down on my other accounts and about 0.1% down on this account. Until it can decide to do... No, I haven't, because I'm actually going to have to close this because it has broken and closed under my my sort of exit criteria, which is a real bloody shame. However, we're going to potentially look at NASDAQ. If it can either hold here or pull back down to this last level, we're going to see. But there's a good chance that I'm going to be flat in the market after losing $145, which don't want to, but you know, exit criteria is exit criteria. And if you're going to have a strategy based around discretion, then be prepared to exit when your discretion kicks in. So like the importance with discretion for me is it holds within the rules. Now, when I see something and I say, right, discretion, stop loss, there it is, I've got to listen to it. Otherwise, that's when discretion becomes gambling, because it is so easy to let psychology and mindset to get the better of you. And so, okay, discretion, stop loss has been hit, but I've got my hard stop loss a little bit lower, so maybe I'll just wait a little bit longer. Oh, no, you know what, actually, if, buts, and maybes. It's like, dude, look, this is your discretionary stop loss. Cut it, walk away, go. You're done. You're over. You're fried. This trade is no longer valid. So it is super important to me that when I'm trading with discretion, I got to be super harsh on myself. Otherwise, because if I let myself slip, this 150 could be 1,500 when it shouldn't have been. And I know for a fact that's going to put me on some form of tilt.
So with the fact that your exit criteria has been met, why are you still in the trade?
I'm not.
Okay. Fair enough.
I've just taken out the trade now. Yeah, I've just taken. So 24 hours later, in fact, bang on 24 hours later as well. And I'm now flat in the market, which sucks, man. You know, it's a crappy feeling. But at the end of the day, look, these things happen. You know, these things happen. And it's more important to follow and focus on your rules than it is to gain profit and to gain bigger potential losses.
The way that I think your approach has always been, and I think your approach according to this has always been like so fascinating to me, and it's always been so good, is the fact that when you decide to enter a trade, it's with discretion. You already have your idea in mind what it is that you want. But at the same time, your exit strategy is also based on your discretion, and you follow to it, you hold to it so well. So the fact that you were still talking about it and hadn't exited yet, I was like, this is weird. Like,
why isn't he exited? Yeah, but
why hasn't he exited? Like, you don't need anybody else's input to do that. Because here's the thing. US 30 is struggling. It's struggling quite a bit.
Do you know the worst thing was as well? I put on the Hong Kong news, and I can't understand it. I know I can't understand it. Sita was enjoying listening to it, and I thought, you know what? Okay, Cece wants to watch and listen to the news. That's fair enough because it's her home country. I was watching the financial news, which is the very, very small part underneath the Hong Kong news, which I could understand. So Cece's there laughing and being like, "Oh, listen to that," and I thought, "Yeah, I can't. Do you know what I
I'm
can
listening,
read
but I'm
though?
not hearing anything.
Do you know what I can read is how the US 30 really isn't doing well, and I am in that trade. Like how the NASDAQ isn't doing so well, and that's confluence with my trade. So yes, while Cece was watching how the Hong Kong news was being impacted, I was watching underneath the financial markets, and I was there like, yeah, this isn't good. Like I'm in a trade right now, and this news channel isn't showing me what I want to see.
I apologize, guys, if there's flickering and all kinds of stuff going on. Like I explained, I'm not at my usual setup, so it seems as though the gremlins. Do you know what a gremlin is, William?
Oh,
don't know gremlins?
I mean, I've heard of gremlins. I know what gremlins are, but I don't know if we think the same on gremlins.
So there was a very short little tangent. There was a movie many years ago, like
Okay, then
1980.
yes, gremlins. Exactly. Yeah, 100%. Yeah, that's exactly what I see.
If you gave them water or you made them wet,
Fed them after midnight.
or something like that, they turn into these little monsters. That's what it feels like right now. It feels like this setup. Everything about the setup, I'm so unfamiliar with. It's not my keyboard. It's not my PC. It's not my screens. It's not.
Oh, you are actually on your brother's setup as well. Oh, bro,
Literally everything.
That's so. I didn't realize how off-putting that was either until I used my brother's setup. It was really weird.
Yeah. So I feel like I've got gremlins everywhere. So I don't have my MT5 terminal up because I don't want to go through the hassle of having to email say,
Log
hey,
out.
listen, I'm going to log in at it on a different IP. There might be some problems. I don't want to do that. So I'm only going to have my trading view up. And even that took some time because I've forgotten my password.
Do you know? Yeah, fair. Yeah, fair. Do you know, that's one thing that I have realized. That's one thing I've never taken into consideration. How lucky. So I'm not going to name the prop, but I've been permanently banned for life on a certain prop firm, and it's quite a big firm. I'm not going to name them. However, I tried emailing them and explaining what was happening, but it turns out I actually logged on through a different IP, and they basically said that I was allowing other people to log into my account. So I was like, oh, okay, screw it. I don't care. Bugger off. There's plenty more props in the sea, So this was a couple of years ago now. Now, that always worried me. However, I have logged on with the Fivers account, $100,000 Fivers funded account, which I don't want to lose. I have logged on from France. In fact, actually, I've logged on from 5 different locations in France, each and every day, from a different IP in France. Then I've logged in to a different location, 5 different locations each day in Italy. And now I've logged in Hong Kong, and I haven't had an email about changing the IP. I am super lucky. Maybe I need to be a bit more careful when logging in to my MT5 account.
Oh, we don't want to.
Bro, I'm super lucky.
So yeah, I'm a little out of sorts today because I really wanted to trade this morning, and it was, from what I can see now, it was beautiful movements on NAS specifically for my strategy, and unfortunately I could not capitalize on it, and I can still not capitalize on it. So I think the first thing that I need to do is I need to get myself a laptop, and then
honestly,
this laptop is going to go with me as my trading setup, rather not just the streaming setup.
I cannot recommend enough. I really cannot recommend enough. So my last laptop I had was a brilliant laptop. I love it. It folded like Transformer style into like an iPad.
Folded in upon itself.
Yeah, it went from that to a laptop to just completely iPad. So it was super cool. It was great. I could do artsy stuff on it, which I never used. So basically, I could do a pile of stuff that I didn't need. which is standard why you buy technology, because they're like, oh, this is cool, don't need it. However, I spent quite a bit of money on the laptop that I'm currently working on now, and I need it. And I thought to myself, you know what? No, there's nothing wrong with my old laptop, but I'm going to buy a laptop that I truly am going to use all functions. And like my parents said to me, are you sure you need it? My brother said to me, do you really need it? My partner said to me, like, you've got a laptop, why do you need this laptop? And the fact that it was a gaming laptop as well, they were like, you don't even game, why do you need it? And I started realizing that I actually need a gaming laptop more than I need a work laptop, because of obviously streaming. I need obviously a load of tabs open, plus the fact that I can plug a Ethernet cable into the back of this. I cannot recommend how important, or I cannot recommend a laptop enough. It'll be the best investment you do. It's actually, I'd rather see a trader with a laptop than with a PC desktop.
Yeah, no, I've come to realize the annoyance. It's annoyance more than anything.
Yeah, it is. Yeah.
Having to
inconvenience as well.
Yeah, it's just an inconvenience. So for anybody out there considering either getting a laptop or getting a let's say desktop computer to do your trading, consider doing the laptop. And if you can, get multiple screens for that laptop rather. But yeah, anyway, I see that there's a fair few people in on chat at the moment. Shall we say hello to all of them?
To catch up. Let's go back to the start and have a bit of catch up with people.
Yes, let's do that.
It is Vinny. Hello, Vinny. Hello, Rich. Well, welcome to get you guys started. Have a look at NZUSD or NZDUSD. What do you think of quick long scalp? Interesting. I'll tell you what I'll do. Because I know Rich is trading you, it's easier for you to get NZD up. No, you've already got it up. Look at that. Perfect. Read each other's mind.
Let's see. Okay, this is on the 5 minutes. So if you're going to be doing scalping, it's probably going to be 5 minute and lower. What I can see is immediately coming out of Tokyo, we do have a nice little base, which is a very nice area where price can come back to rebound off of and react off of. But what I can see immediately, just straight off the gates, very strong reaction, pushing up higher. We did come back down, but when we came back down to this area over here, look how slowed we are. That is so nice. For a scalp to scalp long, if you could have gotten in somewhere over here, or even on this leg over here, man, that would have been a very nice scalp, I think.
Yeah, that would have been super beautiful.
In terms of where to aim for is a little bit difficult, because we have had this most recent high point over here. We've just tapped above. So this was yesterday's highs that we have now gone and broken through and then reacted a little bit lower off of. But we have come back to a 5 minute base, not a 15-minute base. The 15-minute base is a little bit lower. So it's, you know how I refer to the bases. It's the last time that the opposite direction tried to break a trend. So you have this area over here where price pushed up. There was an attempt to break this newly formed attempt at pushing bullishly. This was the follow-up. This was the opportunity where the bears tried to once again break this upward trend, or at least stop it in its tracks before it gets any traction. And then they just failed and carried on pushing up. Once again, this is still on the 15 minutes, so don't be too concerned about the 15 minute. But on the 5 minute, it's beautiful. The 5 minute, it looks really good. 5 minute.
I love that. I love that 5 minute exit. that exit zone, that exit candle for 5 minute consolidation. That is beautiful. What time was that as well? UK time.
The current one, or which one?
Yeah. The current 5 minute. Yeah.
this one.
No. If you go back down to the consolidation breakout.
Oh, over here.
No, next one along. Next one along.
Down
Nope.
here.
To the right.
Even more.
To the right. There you go. Yeah.
Oh, over here.
There you go. Yeah. Today's.
Yeah, there. Yeah, this is so nice. Like, if you could have gotten in there, you have your stops just below that area. So this is what 3.5 pips, and you could have gone for
where we want to look.
1 to 2.
Would have looked just under those highs. It should have been. Yeah.
And
you go. You just missed it. I was going to say that looks like it's super close to 1 to 2.
Just missed it. But I still like the idea of consolidation break after a definite up push. Let's look at the hourly. Yeah, even the hourly is looking good. What doesn't look good, though, is this whole section up over here. You know, a barely higher high. We just wicked. This candle, though, looks good, but the new hourly candle just opened up, so maybe we're going to have a little bit of a push with the hourly candle. That would be nice.
Yeah. I'm just going to open up my data folder quick, because you've reminded me by...
What do we look like on the 4 hourly? 4 hourly is bullish.
Would you?
Oh, yes. Yes. Look at this. You have this whole segment over here. So nice and beautiful. Singular reaction. Pull it further. Secondary action. Beautiful. We're now at our tertiary one. We're right here yet again. I think this is a very nice opportunity for if we do break through. If we do break through, then I think that there is a very nice chance of us rebounding back off of this and then potentially pushing higher. So something like that. That's on the 4 hourly. On the hourly, it's not bad, I think. It's really not bad, I think. I think this high point over here, this high swing, I think may just get disrespected.
Trying to look.
It looks very bullish. So it's Vinny. A quick long scalp, if you had gotten in a little bit earlier, and then targeting for these most recent highs would have been really good. Or let's not say at the high, but slightly below the high. So you always want to give it that little bit of room just to make sure that it actually does hit your take profit. So if we were down on the 5 minute and we entered here, stop loss just underneath there, high, let's say on the candle body close on the 5 minute as an example would have been great. Or something like that. And then that is a 2.4 hour trade. I think that would have been really good. Will, I want to quickly... No. Let's carry on with the chat. Sorry, I wanted to talk about my trade of last night, but let's have a quick little chat, catch up.
Okay, we'll have a quick catch up with chat, and then we'll jump into your trade from last night. Welcome, Richard and Will. Like the stream to support the stream. 100%. Make sure that you smash that like, guys. And if you haven't already, make sure you do subscribe if you are new here. And drop us in comment. Let us know where you're trading from. Unbiased Trader. Hello, Richard and Wilhelm. Or Wilhelm and Richard. How you doing, Unbiased Trader? Good to see you in, brother. Joshua, hey, Rich and Will. Hope you guys are doing well. I am doing fantastic, Joshua. Thank you very much for asking.
I'm a bit red, but I'm doing good.
Morgan.
I'm saying I'm a bit red, but I'm doing well.
Yeah. It looks a little bit hot over in South Africa, but he's fantastic.
Yeah, it is. It is. I would say it's blistering today. It is absolutely crazy hot today, and we've just lost Will, and Will is back again.
I am back again. My Wi-Fi just said no. I don't know what just happened then. That was super weird. Do you have a swing account? No, I don't, but I have a swing strategy on my standard account.
I do. I do have a swing account. It's with a different prop firm. Not going to like divulge where I've got what, but I do have a account that's purely focused on swinging. So I do have one. And can you trade on MT5 or better directly on TradingView? It's an MT5 account, but I don't have access to it now because, like I said, I'm not on my setup at all, and I don't want to jump through the hoops of having to send an email and then say, "Hey, listen, I'm not at home right now. Can you please not ban me?"
Yeah, please don't ban me. It is me. Yeah. Luckily, like when I'm 90% of the time I'm trading on this account, is I'm live on stream with the fibers anyway, so it's not as if like they're not gonna look at me and go, "Oh well, Will, it wasn't you." It's like, "Oh, it was." You can see it's me, so I don't get too worried. But there will be a faff,
you know, conversation or that story that you told me about your account with that other prop firm, and even though it wasn't you, they just straight up banned you, and like whatever you tried to do, they were just like, "No, it wasn't you." Blah blah blah. I don't want to go through that hassle. Now I know that I could have opened my Fivers accounts here, and the Fivers would not have been too worried because they're cool. You know, they're the best. But
yeah, 100%, man.
I don't want to go and play chicken with, you know, with
yeah,
this
no,
other
and that's the thing as well, because like a lot of the time as well, there's not someone going, "Oh, Richard Butler has just entered in through a different IP address." Usually it's AI. Usually it's like the computer will, it's a bot, and it'll flag up and be like, "Right, close." You know, and then you've got to go through the whole process of speaking to someone. So even though the Fivers are super cool, really chilled out, and they will be like, "Oh, okay, fair enough, this makes sense," you know, give it back to them. Even though that is the case, it's not worth the faff. Not for a day anyway. Like if you were like me, moving away to a different country, or if you were going on holiday for a week or a month or something like that, then it's a bit different. But for the hassle and the effort of doing all that now, just for a day, it's just screw that. I couldn't think of anything worse.
Not worth it. Shiv saying, sorry, carry on.
Jafar saying hi. Shiv saying Richard turning red can only mean one thing: Mr. Naughty has arrived.
You guys, you caught me, and I'm still red because Mr. Naughty is still on screen.
I am here. Mr. Naughty is here. Hello there. This is an interesting.
Sonia Joshi. So that's
Sonia Joshi. 6832 done. ES, so the S&P. Below 6845 may go to 6832. Learn to calculate such 100 per targets for any stock index. S. Oh, Sanya Joshi.
You caught us there. You caught us, Sanya.
Sanya, you got us there. You got us. You cheeky devil. You got us.
Cheeky little chatter, you.
You got to get out of bed early to troll us, but you got out of bed real bright and early today, didn't you? Because you got us there. You did. You know what? Bear with me. Sometimes one must admit defeat.
Yeah, it would teach us to pre-read a comment before bringing
said comment. Most of the time I do. Most of the time I will pre-read. But I just sort of yeah, apparently not that one. So
yeah. Anyway, we can remove it from screen now, mate. So let's move on.
Yeah, let's continue onwards. This is a very honest inside look at traders and the struggles that we face emotionally while in a trade. Yeah, 100%. Yeah, absolutely that. Like I said, the importance of sticking to rules that you've set yourself, especially when in discretion. But yeah, there's going to be struggles no matter what. That's the luxury about live trading. That's why I will never not trade an account live with you guys. I will forever trade a live account in front of you because I want you to see the real emotion. And you've seen me go through all sorts of emotions. You watched me go into a 7% drawdown. You watched me get really hot under the collar, really sort of panicked. You've also watched me get really over the moon, happy, gassed when I passed my phase 1, when I passed my phase 2. So yeah, you've seen me with all sorts of emotions, guys, and that is the luxury. That is the perfection when it comes to actually live trading online.
I like the dodge there, mate. Like not saying the username. Do you want to try it?
No.
Is it Puraria Fund? Sorry,
I didn't want to butcher it. I didn't want to butcher it.
Sorry if we mispronounced your username, mate. Anyway.
Usually I'll give it a bash, but sometimes I'll give it a bash. But if I feel like I'm tripping over words in English, when I try and read out someone's username, I'll end up just embarrassing myself and every other participant. So I tend not to. But the Pueraria Fund, please let me know if I have butchered that, if I haven't.
Fluidity FX. Good day, fivers. I know gold pumping, but how would you spot if the reversal is coming? Or rather, a correction of some sort? Good question. Good question.
Order flow.
Yeah, very much. Very much order flow.
Literally just order flow.
So I've got the gold chart up here right now already. So the best thing to do is, if you want to see what kind of characteristics make the most sense for a reversal or at least a pullback, a deeper correction, go back to a point where we've actually had a very good, proper retracement. So if we go back, you'll see here, this was at the end of last year. This was the 26th of December. We had made all-time highs. This is on the hourly chart. We've made all-time highs consecutively, like very, very, very good. All-time high, new all-time high, new all-time high, new all-time high. However, when we had an opportunity to try and push price up yet again, it was either a break-even, not a break-even, a double top, or it was slightly lower. But look at what followed that specific movement. We have recent low swing points over here. We have recent low swing points over here as well as over here. And that's just every time we've had all-time highs. We've slowed down ever so slightly, and then we pushed back a little bit. Then we took all of that back up, new all-time highs. We pulled back a little bit. We slowed down, pulled back a little bit more, pushed up yet again, slowed. So you can see that there is some form of slight consolidation, or at least slowdown on its upward attempt. But it's not a guarantee that you're going to have a reversal. In this case, what you have is price, when it had an opportunity to push lower, it pushed lower quite a little bit deeper than it normally would have. So you would have expected it to have pulled back to somewhere in this area, because that was the last time that price really tried pushing lower and then failed. So price action in this case dictates higher highs, higher lows, lower lows, so on and so forth. So you want to see a new high created, or inversely, if a low has been created, you want a higher low to be created for a new upward push. In this case, instead of having a higher low, we have now created a lower low. So if that was the most recent low, this would now be a lower low, which usually is either a sign of consolidation or it's a sign of reversal. Now, how would you have seen that it was a reversal? With this area over here. If you look at those candles, you will realize that when gold had an opportunity to try and push the price higher yet again on these three bullish candles, it was very short-lived. No new high was created, and immediately it followed up by a new bearish push that once again created a new lower low. So once again, price action is dictating the direction of whether it's bullish or bearish. In this case, the reversal is confirmed by price action, whereas over here, you don't have the confirmation of the reversal. It looks like we're busy reversing, but when we had an opportunity to push price up, there was no follow through to push it lower. So you need to wait for these candles to confirm, hey, we're busy pushing lower. But in this case, it just continued pushing higher. Once again, on the hourly. So that's how I would say start looking for your highs, mark out a high, mark out a low, and then see how price reacts within those 2 points. So if this one is the high and this one is the low, look at how it reacts. Okay, cool. Now we're pushing lower. Oh, we've broken that low. All right. Now we need to see whether or not it's going to go and test the high again, or is it going to create a higher high or a lower high? In this case, it created a lower high. So you're starting to see that structure shift. Now you want to see when it has an opportunity again to confirm either it is a complete reversal or not. You can look at something like this over here. So here you have the signifier that, hey, listen, we are busy changing the bias from bullish to bearish. This is a confirmation that yes, we're definitely going bearish, because when we had attempts to try and push price up higher, we failed, and all of the momentum is in this candle over here, in this bearish candle right here. All of the downward momentum is there. This is a strong signifier that price wants to continue going lower. So what happened? We did have a push a little bit lower, and we were on that low point for quite a while. So until eventually we started to push bullishly yet again, finally breaking above that recent high point. So the same thing here at the bottom as well. You can see it as I'm scrolling out. You can see it very clearly. Low point, recent high point, or a recent high point over there. When we had an opportunity to try and push price lower, we failed. When we had an opportunity to push price higher, we've equaled it, and then carried on pushing higher, higher high, higher low, higher high, higher low. And that's just price action, just straight up. Are you muted, mate?
Yeah, I am. I am indeed.
I was wondering why you were giving me so much time to explain all of this. Normally you would be like, no, I agree.
Bro, I was answering you as well. I was like, yeah, I do that. Yeah. No, apparently, mate, I just really wanted you to have all the time.
Oh, dude, you're an angel, man. I love you.
You know what? I'm gonna be a gentleman. I'm gonna be an absolute gentleman and give you the steak. You can have it.
Yeah, so that's how you would. That's how you
continue.
Would recognize it.
Yeah, but I don't even. Oh, that actually looked like I went through the screen. Anyway.
Konnichiwa, Will, and Awe Rich.
Konnichiwa to you too, Wesley. Even though I'm in Hong Kong, not Japan, but you're close enough. You know, that was konnichiwa to you too, bro. That will do, my friend. And awa. Was it awa, Rich?
Awe.
Awe.
So it's a South African slang saying of like hello. It's like awe bro, you know.
Awe bro. How you doing?
Okay, why do you have to have the rolling R's in there as well?
It just, I don't know. I just instantly turn into fuzzy, like instantly. the
Oh, yeah,
I
that's
just
true.
hear, all right, bro. It's just that's the first, like, when someone says, think about South African accent, I don't think about my very good friend Richard Butler. I think about a friend of
Fuzzy.
me and Richard Butler's. I don't know why, but yeah, that's just where my head goes. Is Fuzzy topless going, hello, bro? Yeah, and I'm like, yeah, fair.
Anyway,
Oh, man. Yeah, moving on swiftly again. I'm using one to trade as we speak. I'm guessing this is on about
Surface Pro.
the Microsoft Surface Pro. Nice. That's the to be fair, the one thing I don't like about it, this laptop now, it's a lot heavier and a lot chunkier, but it feels a lot more sturdy. Whereas my last laptop ended up having a crack going through it, just because it was so soft, and obviously because it wasn't an actual, I don't know, can't remember.
Will is out again. You back in, mate?
Yeah, can you hear me?
Yeah, no, I can hear you.
Oh, awesome. Yeah, cool.
Sachin saying NASDAQ new lows. It does look as though NASDAQ wants to start making its way lower. I do have an area over here, which is roughly 24,778 to 24,669, which I think is in play potentially. And then below that, if I go on to the 4-hourly.
Just to let you know, when you're done with that, Rich, I'm going to bring my screen up because I got something a little bit juicy for you guys.
Oh, awesome. So let me very quickly do this. If that area gets broken, then we have two areas down here which could theoretically be tested. If we do break through 24,778 to 24,669 on our way down, the very next area to be tested is 24,476 and 24,292, and then if that gets broken and disrespected, we're looking at 24,141 to 23,849. So, and that is just the most after this, the most recent lower swing points where we've actually had a little bit more bearish involvement to try and push price lower. So you can see last point of bearish pressure, and then a bullish, very strong bullish push, another bearish attempt, another bullish push, and then from there on we carried on going nice and bullishly, and we never came back to test this area. So I would definitely keep those areas in mind. Anyway, as you were, mate.
Absolutely. So what I was just looking at was the next comment now, saying that, well, after online e-commerce, I'm going to say, hello, Rich and Will, Kim. Hello, Mama. How are you doing? Good to see you in. The next comment is really interesting. So Ed Garvos saying silver had a drop. Maybe a good scalp opportunity. Now, those of you know that I do not trade silver. However, what is a little bit similar to silver that we've been talking about very recently is gold. The very yummy color, the very cool, very snazzy jewelry, but more interesting than not is the fantastic trading asset that I have currently entered a sell on. Let's go ahead and take I know a little bit. I told you it's a little bit juicy. Told you it's a little bit juicy. I'm selling in a bull's market. Is it stupidity? Is it bravery? Or is it just pure skill? Who knows? Time will tell. I don't even think I know at this point. However, nonetheless, it is still a very good setup. A little bit worried about this wick. Let's bring this. Let me mark the wick up just in case you guys can't see it. A little bit worried about this wick here. Excuse me. Still, like, everything's still coming up after being ill. So I'm still trying to clear my throat after that run earlier. I went on a nice long, well, I say long, it was a 3.7 mile run. It wasn't long, but the hill is like an 800-foot elevation gain all at once. It was just absolutely, the rest of it was flat. Anyway, looking at gold now. So we've got this nice little consolidation area, got this beautiful bearish close here. Entered in on the new candle open. I want to see a bit of a pullback back into this area here, which we are getting. Now that we've tapped in, let me just reset set my stop loss. So I think we're risking about 0.5% on this. This is on the 5-minute time frame. Where would I be targeting? Now we've got lows here, which would be low-hanging fruit. But I quite like the look of these lows just down here. Now, it doesn't mean I'm anticipating it to go all the way down here. I'm going to keep an eye on these and manage my trades, but I feel like these are going to be quick in-out scalps. If I can just try and claw a couple $100 back like here and there, then I'm going to be happy. I'm not going to go for gold. Just going to do some quick scalps to try and, like, high value A+ setup scalps, just to try and recover my losses over January, which are probably close to 1% by now. So yeah, I wanted to see a bit of a pullback, which we've gotten absolutely perfectly. If I look at the 15 minutes, probably not going to be that nice. No, it's not. If I wanted to, I suppose I could have waited for a 15-minute close around about here. Hang on a minute. Around about there, a 15-minute close around this level here would have been really nice. Nonetheless, doesn't mean that this trade is invalid. Like I said, it's a low time frame potential scalp. I want to see what we can get out of the market here. I think price can go a little bit lower before we continue up. Price looks like it's slowing down and trying to break structure and trying to break that order flow to the downside. So I am happy to be trading this price. Even like I said, even if I can bank a couple of $100 from this, I'm going to be pretty happy. So we'll see. We'll see how it goes. But I thought I'd just update you with that.
That's awesome, mate. I was just scanning through the chat quickly. There's some really, really good questions, and then there's also some suggestions. So Nexus was asking about. Sorry, it's a little bit down, but Richard and William, if you could explain your setup step by step. Now, what Will just did now was effectively explaining his setup for his trading step by step. But we generally do go through step by step things when we basically explain either trades that we have taken and the thought processes around those trades. But it's just, we were talking about this yesterday. It's a fraction. It's a fraction of what led to profitability. It's not just the strategy. It's the psychology that goes around with it. It's the attention to detail, noticing certain changes in the market, and that comes with experience. So I can definitely show you exactly step by step how to get in on a trade, but that alone I don't think is going to help you just to achieve profitability. But it's a good step, and we can do that. Do you know what? I just remembered now.
Go on.
A few weeks ago, on the Fiverr's channel, you can go back and look at the Fiverr's live stream history, and there was a week where all of the hosts basically gave everybody on the live stream just a very simple to follow strategy, something that they themselves have used or they themselves have actually implemented that they know works. You can go and have a look at those videos as well. We can maybe ask Remy, if you would be willing to just post a link for the week. It's the risk week. I think it was. Can you remember when you did yours?
Can't exactly remember when I did mine, but yeah, I gave a full top-down strategy. In fact, I actually gave two strategies. I gave an intraday strategy, and I also gave a swing trading strategy that you guys can go over and test. But like I did say, test it yourselves. Don't just rely on the fact that I say it's work. Go test it and go find whether it works for yourselves as well. But they were two strategies that at the time I was currently using.
So I think there were 9 strategies in total. And on the Friday, Jonathan gave his strategy as well. So we had a strategy from Anastasia. We had one from Dirk, from Will, Richard Wells. We had one from Griff, like Pedro, everybody, Victor, everybody had an opportunity, and they had a whole 2-hour segment going through everything of showing you what to look for a specific trade idea. So you can go and have a look there, but what we'll do is when I go through my trade that I took on NASDAQ last night, I will take you step by step, my thought process around taking that trade and the decisions that I took leading to taking that trade.
Yeah, just seen Londo saying, hi, I just passed my high stakes. How long does waiting for risk take? Not long at all, but it depends. It can take like anything from a couple of hours to, I think, like a couple of days. I think the longest I waited was like a day or two. But then on some of my other Fivers accounts, I waited like an hour, if that. So it shouldn't take you too long at all. But big congratulations to you, my man. Well done on passing that account. That is... Michael's saying, lol, away, Rich.
Sorry.
Apologies.
Now, before you carry on going lower, there's a few questions that I skipped over, which I do want to apologize for. Scribbles, did you just say that you can't open your MT5 account and trade from outside your own home IP address? No, what I'm saying is that some prop firms have had that as like a hidden rule, where they kind of like assume that you are handing off your account to another person to trade, all right? Now, it's not a human that's sitting there and verifying this, it's a bot. So if the bot sees that Richard took his trades on this account from this specific IP address for months, and then all of a sudden, there's a new login from a different IP address, it gets flagged, all right? Now, I'm not saying that the Fivers, you're not allowed to do that with the Fivers. What I was saying was I don't want to test that at all. So the accounts that I do have some with different prop firms. I don't even want to run the risk of that potential, because Will has shared a story where he straight up got banned for doing that, and when he had to go and explain, they were like, listen, sorry, just the evidence is that you shared your account because the login was from a different IP. So for me, it's one of those, I don't want to play that game. I'm not even going to go and test that theory either. Not that I think that the Fivers would ever do that, because Will has gone and traded his account
all
across
over the
multiple
world.
countries, and there was no issue. But once again, when in doubt, contact support and ask them clearly for clear, concise information as it's written down. Don't just go on what I have to say, because once again, I'm just a streamer. So my words should be taken with a big bag of salt.
Yeah, absolutely. Yeah, don't take anything we say with too much severity. If you're ever in doubt, check it out. You know, if you're ever in doubt, go read it, go ask support, go chat to the fantastic team behind the scenes in the Fivers. We are just ugly faces. Well, I mean, he's got a pretty face, but you know, we're just pretty faces of the Fivers. Rumor has it.
Today I'm the Red Roman.
Yeah, we're not pretty faces. Usually we're just pretty backgrounds, and in this case, I'm neither.
It's wonders what a good editing program can do, and some filters on a camera. It's amazing.
I know, innit, bro? Like, I look nothing like this in real life.
Yeah, I've seen him in real life. Like, ooh, you guys will fall in love with him. We do have a new gentleman in. Is it easy? Hello, guys. Greetings from the audience from Indonesia. That was 29 minutes ago. Welcome. Welcome from to the Fivers from Indonesia. Welcome. Any questions you have, drop them in chat. We are a little bit slow at the moment. We do apologize if we're not getting to everybody's comments, but we do try. We really do try to get everyone's comment.
Yeah.
The Pathan is saying, sir, please, gold analysis. Will, you're in a gold trade.
Oh, that's
maybe.
I've got gold open. Shall I have a look? Oh no! What's going on with gold?
I don't want to say
you
anything.
bugger. Oh dear. Oh dear, oh dear, oh dear.
What I would say is,
Dude, I've lost my edge. What's going
no,
on?
no. I see exactly what it is that you were seeing. I see it exactly.
Yeah. If we break and close now above this zone, so be it.
Yes,
You know, I'm not gonna stop and reverse.
No,
Or will I?
don't close just yet. I think
No,
there is
I'm not going to. It's not in my discretionary rule to close just yet. Now, however, if this hits my discretionary rule to close and it drops, like yesterday, I am going to be so angry. But like I said earlier, rules are rules and they must be adhered to.
Go over to
Now,
the hourly chart on gold,
let's have a look.
and then you'll see if you zoom in ever so slightly, just to today in of itself, very slowed during the London session. Yes, the Tokyo session very, very, very bullishly, but when we came into the London session, it's very slowed. So even this hourly candle right now, there's 23 minutes left on this hourly candle. It's very, very much struggling to get like that momentous movement up higher. Yeah, got a bit of a wick below it. Yes, we are still very bullish, but I think for a scalp, it's not bad for a potential, because it is slow. It's very slowed. You were seeing a little bit of.
It is very slow.
Yeah. So
because of the 15-minute, depending on how the 15-minute closes, I may stop and reverse this, but not where it's at now. Okay,
No.
Okay, it's now hit my stop loss criteria. If it closes, we've got 4 minutes before this now closes. If it closes now where it's at, then it's hit my stop loss criteria. Truth be told, if it even breaks this high here, then that is my stop loss criteria. If it closes above this high, I'm actually going to open a buy position, which is going to be
nothing stopping you from reversing, or not, let's not say reversing, but there's nothing stopping you from changing your bias. There's nothing wrong with that.
No, exactly. Now, this could be red flag as hell to a lot of people. Now, what I will do is I'm going to not give my reasons for it yet. I'm going to go ahead and do something more catching up with chat. I'm going to set an alert here. And then what I'm also going to do is let Rick...
Oh no. William, wherefore art thou, William? Let me have a little look at chat while Will is AWOL at the moment. Let's have a look at GU. I see somebody, HB asked for GU. Sorry, Will, I see you.
That's right, mate. I went, so you crack on.
Let's have a little gander at GU at the moment. So, HB 23. Sorry, you asked 22 minutes ago. All right. So if I start on the 4 hourly on GU, let's have a look-see. So what I can see on GU was we did have a strong bullish push from, what was this, December. So December was very bullish. We came into January. January started pushing bearishly, started making lower lows. When it came back up, it was a lower high, another lower low, another lower high, another lower low. But yesterday, was this yesterday? Friday, from the end of Friday, that was news. We had a high impact news on Friday, pushed price even, it pushed price a little bit lower, but then completely closed out bullishly, which is not a good sign for this downward sell pressure. We had a very, very bullish Monday going into Tuesday continued. We came to an area where we recently already, as early as the 13th of January, already had a singular reaction. So it was established here. The base area was established over here. We had the reaction once, and now we've got a second reaction. The second reaction from yesterday seemed pretty strong to continue this bearish down push that we've initialized in the beginning of January. But if I go down to the hourly and then I look at the same idea, we have this very slight area over here of consolidation in the London session, which also coincides with a recent swing point. So something like this. If I then pull it all the way through, you'll see that when we broke through this, so this was the last time that price pushed lower. This was on the 9th. When price eventually came to this point, it broke through strongly. When it came back to it, it kind of like just wicked off of it, but we entered an area of consolidation over here. We tried pushing above it, we failed. Tried pushing below it, we failed yet again. So you can see a very strong area of consolidation right here. So if I take this and make it consolidation, you'll see that very strong consolidation. Then we had that rollover candle from Friday, which was very strong. But this was based on news that we had on over the weekend as well, which pushed price bullishly. But at the same time, when price tried to come back to this point again, back to this area of consolidation, it didn't break lower, it pushed higher. So we are now at that point where we've come to retest an area of slight consolidation, which is this small little area over here, which has already had a singular reaction, and now we're at our secondary reaction for it. And it also coincides with the list low point over here that got tested, consolidated by, tried to break through, failed. So what I can see is potential for buys right now. Where we are right now, even though we've pushed bearishly the whole day and we had the strong bearish candle, I can see on the hourly at least the idea for buys maybe back to this area up over here. On the 15-minute, we had area of consolidation here, the lower end of the Tokyo session. We tried breaking above. We failed. We didn't even create a new high. We didn't even come and test the Tokyo high. We just pushed lower, but we came back to this area, which we explained on the hourly as well. We slowed down significantly, and now we're getting much stronger bullish candles than we did bearish candles. So this might be a potential turning point for us to try and push higher. Now, obviously, it's going to probably be something like this. It's going to depend on what the New York session is also going to bring for us. But it is very slowed here. And we are getting an equal low, a high, what seems to be a higher low on the 15. Let's look at it on the 5. Yeah. So high, we've already tasted this most recent high, this one over here. And we have now a new higher low, as well as a double low down here. So this is starting to look more bearish in my opinion than bullish in my opinion than it is bearish. What do you think, Will? You agree?
Yeah, no, I do agree with that. You know, it'd be interesting to see what happens now. I mean, time will tell, but I don't know. I'd be tempted to agree with the idea that we are a little bit more bearish right now. But I don't know. It's Euro that I'd be a bit more interested in than GU right now. Who has hurt Euro's feelings? Like, who's broken Euro's heart? Wow. Talk about a financial glow up. Talk about eventually finding its feet. Like, me and Rich have spoken for months about how Euro has just been dead. There's been flat markets, nothing to trade, no opportunities, nothing great at all. All of a sudden, Euro has been a very, very nice move in pair.
Very, very strong bullish on EU. Like, very strong bullish. Like you said, who hurt them? Who called EU fat to their face?
Yeah.
Who did that?
Literally, mate. Literally that. Like,
EU went on a diet and went to the gym, mate.
It clearly wasn't listening to us. But
No.
someone has gone up to Euro and said, everyone hates you. They think you're flat. Nothing's going on. No one wants to trade you anymore. Gold is taking over. And Euro's just saying, yeah, you know what? Screw this. I'm going to show you exactly who's flat, and then just move to the bull side.
Yeah,
Whereas GU at the moment.
GU does look bullish, but I can still see a reason to sell GU as well.
Yeah.
Even though right now it is showing bullish movement, I can definitely see the idea of sells, because I had an order block, a base area that was tested once, reacted very strongly off, made that an order block, came back down, tested it. It also tested this base area as well, and then from there we haven't really pushed higher, but instead we pushed lower. So I can see the potential for sells as well, even though we've had this reaction here, which, come to think of it, is also lower than yesterday's lowest point. So we've kind of like, we've eaten up all of the lows of yesterday, and now the idea would be, are we going to go to the highs of yesterday? Maybe? Not the way that it's running currently. But this could have been the potential of a turn. Could have. But the more I look at it on the 15, the more I'm not convinced of bullish pressure on GU. I'm more convinced of bearish pressure on GU.
Yeah. Talking about bearish pressure, go check out gold. Hello. Gold has decided to start dropping, but I've taken out. There's so much ambiguity in the market. I'm flat. I'm not interested in trading gold right now. Truth be told, not that interested in trading on the 5-minute right now. I'm just gonna wait to see what the 15-minute does. I'm off to. Say again.
I think you should have stayed in.
Yeah, probably, mate.
On gold, I think you should have stayed in, but you've made your decision, mate. Like you made the decision that was right for you.
I may get back in. I may get back in if we can drop a break and close below 48.54.
Look at that in relation to that most recent swing point. Oh, how good is that?
I know. Yeah.
Anyway, you made your decision.
Like I said, 48. Yeah, if we can break and close that, so go on to the 15, see those lows there, the double wick, there we go. If we can break and close below that, then I'd be very happy. I will probably enter back in, not on this account, because it'll be off stream at that point. So not on this account. However, me and my partner now are off to watch some horse racing. So I'll probably log into my other accounts on my phone, and then I'll probably watch some horse racing while selling gold if we can drop below that point.
All right. Well, you've made your decision. I support your decision. I do think that you could have stayed in a little bit longer, but that is just.
Yeah.
I want to be right.
Maybe. Yeah, maybe.
I want to be right that it's going to sell off a little bit. I want to be right, but yeah.
I feel like if I was to stay in this trade, it would have been on hopes and dreams, not on analysis.
Fair.
And even though, like you just pointed out, even though the analysis was there, even though we had a look at the wick, we had a look at the price action, the following, the 5-minute, even on the 15-minute, it started identifying that it could sell off pretty strong. Even though the analytics of it showed that I could have stayed in and maybe I should stay in, even though that was the case, I still feel on a personal level that I would have been waiting in and holding on hopes and dreams.
Yeah. No, I'm inclined to agree with your analysis, and I'm also inclined to agree with your decision to get out. It's like you said, you had an idea, it felt as though the idea was being invalidated, and you made a decision, and yeah, you should stick to your decision.
Yeah, 100%.
Let's-
Although, like, will I enter back in? I'd need a higher time frame confirmation if I was to enter back in now.
Fair. Where were we with chat? It's Vinny saying that quick scalp on NU went great. Oh wow, yeah, it did. I mean, we broke these recent high points over here, and we're continuously going bullish. Yeah, it looks good. Awesome, mate. Like, good for you. Primal Light saying AUD is having some big swings. Yeah. Let's look at the AUD pairs as well versus Canadian dollar. It is swinging a little bit, but what is the size of these swings? So swing high to swing low is 16 pips. Okay, yeah, that is quite large. Though it doesn't seem out of place, though, to have large swings. AUD franc, same as AUD CAD, AUD Hong Kong dollar. We don't really care about that one. Will might care about it. We don't. Australian.
Bro, do you remember
NZD?
on Friday? Was it Euro Hong Kong dollar I traded? Mate, that used to make me so much money. Yeah, Euro Hong Kong dollar. If anyone wants to trade a straight, like an exotic pair, Euro Hong Kong dollar, bro, guys, that moved perfectly into my strategy as well. It would literally just have the consolidation breakout, and it would move with impulse, and it was like perfect for that 5-minute scalp, because like the move would only last like a couple of minutes and then it would die off. So if you're looking for like just quick buck, dude, Euro Hong Kong dollar was such a nice pair that I traded. Yeah, it was good. we had such fun trading it as well. Oh, I had fun trading anyway.
Nice. Anyway, you said something about going horse racing?
Yeah. We're off to the races. I mean, they started hours ago, but obviously, I'm streaming, so my partner's getting ready at the moment, and then we're off to the race course. So I think like the last race is at 10 p.m. or 10:30 Hong Kong time, so it gives me like an hour and a half to get there. But dude, it's such a nice night, like evening out. The last time we went was when we first landed. We went there, and bro, it's amazing. Like you've been to a rugby match or a football match with the floodlights are out.
Yeah.
You imagine that everyone's well dressed, everyone's having a bit of a laugh, having a couple of drinks. They've got live music on, like live singers, and then you're watching the horses go round. And I don't know, maybe it's because I grew up with horse riding. I grew up around horses. You go and you can hear the horses going galloping around the track, watching it, have a bit of a flutter, chuck some money down, nothing too serious. And it's just a really nice night. It's never too cold either. So I don't know, I just enjoy it. But I said, I grew up on horse racing.
Even though you've moved to a new country and whatnot, I think that there's so much to explore and so much to experience. So take your time, experience everything that you can, and then just kind of, I don't know, come back when and if you do come back, kind of bring some of that stuff over.
That's a big if. Oh, mate, 100%. Like my partner keeps saying to me, she's like, Will, what are you bringing back? Like, what are you going to take back to the UK? I was like, I don't know. I'm going to have to hire a cargo plane. Like, can I scoop
everything,
all of Hong Kong? Yeah, can I just gather it all and just waddle onto the plane? Like, oh, don't mind me. I haven't got anything to declare. No, nothing.
I don't have anything to declare. Says with 100 and something things in his backpack.
I'm like border control's worst nightmare. Nothing. I haven't got half of Asia in my arms right now. Oh man. Yeah, no, I don't know. I'm gonna bring back the family some things, but I don't know what yet.
Dude, that sounds awesome. Empress Savvy saying, is it possible to have any insights on US 30? Well, the last person you want to ask is Will.
Yeah, don't ask me. Please don't ask me. Just shall I have a look?
US30 has been
I think I made a good move.
bearish.
I really do think I made a good move. Yeah, it is bearish.
Yeah,
all the US assets are going down at the moment. Like, I was probably I know that I entered in due to a technical analysis and technical reasons, and that is how I trade. However, if you're not keeping up with any form of fundamental in the US right now, and you trade US classes, then I think you're silly. I probably shouldn't have entered. I probably should have realized and looked at it and thought, I'd be kind of stupid if I entered into any US class right now, like US indice. However, I trusted my technical analysis a little bit more than my fundamental. Maybe I should have implemented a bit more of a hybrid strategy.
Yeah. This is the daily chart on US30 since roughly the 24th of April 2025. We have been in this nice bullish channel. It's been adhering to it so nicely. We've had short little bursts where it kind of this red line and this green line is just the 25 and the 75 mark point on the channel. But we've had times where we've just reacted off of the 75, we've reacted off of the 25, reacted off the 25 again, reacted on the 100 point, came back down, almost touched the halfway point, came back to the 75, and so on and so forth. So we've really been respecting this channel overall. However, here where we are now, we've had quite a attempt at a pullback here. So this was a strong attempt at a pullback. This was Friday, the 14th of November, so almost 2 months ago now. And since then, we took quite a bit of time to retake all of this retracement, basically. So that was only until the 11th of December, so almost a month later, it took us to take all of this retracement back. Now, we had a double top area over here from December 11th until December 26th. So a week and a half of struggling to break through. We've eventually broken through that, but then immediately entered a consolidation phase, immediately, which is concerning because to me, even though we are very bullish on the daily, if we do go down onto, like, say, for argument's sake, the 4-hourly, you can see this area over here is long or has been consolidating for long. So that's not a good sign for potential continuation going higher. You want, if you take a higher point, you want to pull back a little bit and then show nice momentum pushing price higher. We haven't had that for a while, and this is a few days. This is we started this the 6th of January, and that's the bottom of the range versus the top of the range, which was the very next day. And we've been hopping between these 2 points up until yesterday, Tuesday market rollover from Monday, and only now have we broken lower. So I can see the potential for us to continue pushing price lower on this, at least to the point where we come and test potentially this bottom area of this ascending channel, like we had done over here. Same idea. So how long are we going to be bearish? Can't tell you, no idea. But we have started creating a bit more of a bearish channel over the last week or so. We do have areas to test. This area over here, though it's a large area, is somewhere where we're close. It is in line with a recent test point. So those ones were also tests. So if you carry on going back, you'll see, there's a base. There's a very nice area over here, which I call bases. So a rally, an attempt to break the rally, which is a base, and then another rally. So a rally, base, a rally. And then you've had these reactions off of those rally points. That's on the 4-hour. If we go down to the hourly, you should see more of that base come into play as well. Once again, rally, there's a base, a rally, little bit more of a pullback and then a continuation pushing price higher. You can take that whole area there as a base, and then if you pull it through, no real reactions on it whatsoever. So not in play at all. So definitely this area of consolidation over here you can have a look at. Small area of consolidation. Price reacted off of it once. Price broke through, came back to it, and just got tested. Sort of reacted upon, not all that strong. So I would say that this base is the one that had the largest reaction from off. So I think we can definitely come and test it. I don't know if we're going to see it with New York Open, whether or not it's going to push lower. We could see it try and push higher again and then just fail and then continue pushing lower. But I do think that this area over here is very much in test. Hey, look at me, I made a 1. Or a seahorse.
I was going to say, a seahorse came to mind. Anyway, guys, I'm going to have to love you and leave you. My Wi-Fi seems to be, being a little bit jumpy at the moment anyway, so it's probably a good time to clock off anyway. So, guys, if you don't already, go ahead over to Will Davis official Instagram. I will be probably posting a couple of my stories tonight if you want to check out some of the Hong Kong horse racing. If not, I shall see you all tomorrow with the new. Oh, have I gone again?
No, you're still in, mate. You're still in. Again. Oh. No, you're still in.
Am I back?
You're in, mate. You're in.
Oh, I'm still in. Oh, yeah.
You're still in.
Oh, okay. Right, guys, I'm going. Bye-bye. Bye-bye.
Cheers, Will.
Right, thank you very much, guys. Love you all. See you all tomorrow. Take care, guys.
Cheers, Will. All right, guys. So as I was saying, we are smack bang at an area right now where we've had a very strong reaction off of already. But I can kind of see us push lower from here on US 30. So for anybody who's looking at US 30, it's a little bit bearish ever since we've had this gap down from Monday. I do think that we are still overwhelmingly bearish. We've shown zero signs of bullish momentum whatsoever. And NAS is the same as well. I trade NAS predominantly. This gap over here on Monday, same idea. We haven't even remotely come close to trying to fill it, and we've only been showing bearish structure since then. So yeah, I'm still very bearish on NAS until it proves otherwise. Let's have a little look at chat. Martin I, good afternoon, Martin. How are you, my friend? Richard, like always, when I'm here, NQ view. It's bearish, mate. It is strong bearish. And on top of that, when we've had this low point over here that potentially could have acted as a support point, it's strong push through, and that's even on the hourly. If you go down to the 5 minute, it's acting as a resistance point now as well on the 5. So yeah, even though we have had a slowdown right here, so we're not having this like volumetric push down, but it could just be the how can you put this? It's that in anticipation for New York to open up, we could potentially try and push higher again and try and test an area. Where is a good area to test? I mean, this area over here looks a lot more like a testable zone, and then the very last upward candle, this one over here, is a potential area to test. So we have a drop, triple base. Don't really like triple bases. Drop, another base, and then another drop. This is also a very particular area to come and test because it's a very short-lived bullish push on the 15-minute. Price could come back to this area over here. But like I said, this needs to be disrespected first. And this one is a little bit stronger, in my opinion, than these ones. So I'm still on the bearish train for NASDAQ. But I can see pullbacks on NAS, either just before New York session or during New York session, and then a continuation to push lower. Offie is saying it's a good scalp until Trump speaks. Very true. That's very true. He has absolutely screwed many traders who were in trades thinking one thing, and then all of a sudden a Trump tweet comes out and all hell breaks loose. I agree. AU being a leader among the US pairs, AUD overall is strong and NZD is next. Yeah, AUD, I agree. AUD looks very good, strong. Looks very strong at the moment. GU, not so much. Not GU, pound. Pound, not so much. Pound is not looking very great at the moment. Euro is a bit across the board. Euro dollar looks really good, but it doesn't look all that great with AUD as an example. So still looking pretty good. Unbiased trader, it would be good to get schedule of host weekly timing so we can plan according. Description seems to be incorrect half of the time. We do apologize for that. We've had some unexpected things happen in the background. So let's I'm not going to give you an exact date, but let's say very soon we're going to have very particular descriptions that should align a little bit more with the changes. I do apologize, unbiased trader. I do apologize if it is thrown you a little bit into a curveball, but we're going to change those things, and it will be awesome. The IP address rule is crap, given we could trade at home, car, or in the pub. Like I explained earlier, I don't believe that that's an issue with the fivers at all. But I know from experiences that, like for argument's sake, Will has had, and other traders that I know, that some other prop firms do have it as one of their hidden rules. And because there are these, let's call them AI clients that they use to kind of like review certain things. So the sheer amount of reviews that they have to do, they kind of like allow a bot to do all of that, or the majority of it, because one human cannot get to all of that stuff. So they just kind of like leave it over to a bot. And the thing is, with a bot, you have if this, then this, if this, then this. So if they see, oh, IP address is different to what it normally is, they flag it. And it could take a long time for potentially a support agent to go and have a look at it. Once again, I'm not saying that this is what's happening at the fivers. I'm saying that I don't even want to risk doing that. You know, I don't want to give anybody a reason, even if it's not a reason whatsoever. I don't want to give them a reason to consider, hey, what's going on with your account? Something's happening here. So I'd rather just avoid it by not changing my IP address or having it up on a day like today. Today, hopefully, is only going to be a problem today. You know, like the whole electricity issue, the whole internet issue, everything, I hope it's only going to be today. So tomorrow should be back to normal. We've got Mario Walter. We haven't seen you in a while, Mario. All my time with the fivers, I always trade from laptop, mobile phone, and from all different locations in my country. I do not believe there would be any issues unless maybe you are using different devices. See, it's exactly this. Like 100% you have never had an issue. And I agree with that. But I don't just have fivers accounts. I have other prop firms as well. So I know with them, there may be a problem. So I don't want to start something that is not a problem with one of my accounts, but it might be a problem with 3 of my accounts, and then I get complacent. So I'd rather just remove that that issue completely. But yeah, with the fivers, I 100% agree. I don't think you will ever have a problem with this. In my opinion, and no, I'm not saying that because I'm on the stream or because they are forcing me to say this. The fivers, in my opinion, is the best prop firm in the industry, hands down. And I believe that all of the rules that they have is fair, and I believe that they make traders better. I have incorporated a lot of the rules that they have for their accounts, specifically the high stakes account, and I have incorporated that in my personal trading, and my personal account is better off because of it. So use that information as you will. I honestly think that they're a godsend in the prop sphere. And already add payouts, etc. By different devices, I mean you start using devices you never used before, and or random, use once and then drop, then again different one. Yeah, those things might cause like a little bit of a flag, and then they might like pay attention to your account, as an example. Now, I know with one of the accounts that I had with a different prop firm, it got flagged for that exact same reason. I was moving from one town to a different town, and my IP address changed, and they flagged it immediately. The moment I opened up my terminal in the new town where I was living, they immediately said, "Hey, listen, what's going on here? This is not the registered address. I needed to fill in a I've literally forgotten the name. Change address. I needed to fill in a change address. I need to re-FICO with them as well. So it was just, I don't want to even play that game anymore. Ophi asking, did you increase your lot size, Will? For that gold trade, generally Will is between a 0.1 and a 0.2 if he's going to do multiple trades on one specific movement. So he'll have a breakout and have it at 0.15 lot size, and then he'll wait for a retest or a better price, and then he would go in with another 0.15. So he'll have a total of 0.3 lots in the market, as an example. But I've rarely seen Will go above 1% in total across two trades. So I don't think he would even go 0.5% on one trade and then another 0.5%. He usually cuts them down significantly. So I don't think he increased it. I think he actually decreased it. MD Sharoz saying, hi, Richard. Hope you're doing well. Dude, I'm doing better now. Can you please explain about gold? Yeah, sure. I can go through gold a little bit quickly. Gold has been parabolically bullish for the longest time. We had a little bit of pullbacks, stronger ones, but they were very short-lived. This is on the daily time frame, and price has since continued pushing higher. Today is very strongly bullish for now. I didn't actually even have a look at whether or not we have high impact news. I might have to check that because, like I said, I'm not even on my setup, and see, that's the thing when things, are a little bit outside your comfort zone. Like, I wouldn't say flustered, but like I forget that thing is there, and I didn't even have a look at it. I'm gonna have a look, but I don't think we've got news. So gold has been very, very bullish across the board. However, over the last 4 hours, over the last hour or so, we've slowed down significantly on our push up higher, which is reminiscent of yesterday, the same idea. Very strongly bullish during Tokyo session. We had a break point. This was Monday. Monday we were just consolidating, but that makes sense. Monday we had the bank holiday in the USD for the Martin Luther King Day. So overall, just a very consolidative day. We had the breakout from Tokyo, which also makes sense. And then we had a small little section of consolidation with a potential pullback to this base area on the hourly, which we had. So price whipped back into it and then started pushing higher off of the space. Same thing, a little bit of consolidation here, then a nice push up. But if you look at how strong this Tokyo session, which is this pink box is, it's very, very, very strongly bullish, very strongly. And generally when you have like very strong bullish pushes, at some point people, especially if it's all-time highs on gold, I say people, but you can imagine, you can put any industry, you can put any hedge fund, whatnot, into that bracket term of people. People will look for, okay, maybe this is a potential good place to start selling some of my gold because I got in very low, so let me lock up some of that profit, as an example. So in that case, right now, we're seeing a lot of slowed upward momentum. So even though price itself does seem like it doesn't really want to push bearishly all that much on the hourly, the fact that it's so slowed does show either people are very content with where the price is right now, or they are slowly but surely selling off and there's immediate buyers to take up that sell. But they're kind of like balanced. So the buyers and the sellers are like, every time there's a seller, a buyer is jumping in, and they just kind of like aligns with them. So that's what you're seeing right now. Doesn't necessarily mean that just because we have slowed momentum that we're going to have a reversal. Doesn't necessarily mean that. But I would always tread carefully around all-time highs, first and foremost, and secondly around consolidation, because consolidation can either be consolidate, we're unsure where we want to go, and then break out strongly. And if you're on the wrong side of that, you're screwed. So the only thing that you have is your stop loss to help you, and sometimes you even get slipped on those. Or it could be the signs of a reversal coming. So in this case, I'm more inclined to think there's the potential for it to break out and push continuously bullish. But I can also see people trying to take scalp sells on gold, and it makes sense as well. I hope that clears it up for you, my friend. Beatless Frieder is saying, how can you help me verify, or can you help me verify my account on the Fivers, please? Surely I can. What you need to do is in your hub, you need to, on the bottom right, there should be a chat section. Go right there and then select talking to an agent, one of our support staff at the Fivers. Those guys are amazing. I've never had an issue not being sorted by them. They've always gotten onto it and given me whatever problems I had a right fixing. So if you have a problem with your account not being verified, go and ask them to help you with your verification of your account, and I am 100% certain you will get a correct fix for that. Dishon Okech is saying, is there an explanation why gold moves aggressively on the Tokyo session and slows on the new London session? I almost read New York session. Yes, there is. So if you go and look at who is the most interested in gold to buy and hold, to buy and reserve, or to even trade, it is the Asian session, because you have China, who is a very strong proponent of buying and holding gold. You have Russia during the Asia session as well, that also buys up as much gold as they can. You have India during the Asia session that also wants to buy up as much gold as they can. And then on top of that, you also have Australia, which is also a large buyer and holder of gold. So you have all of these countries that really want to hold or reserve gold. So they buy up as much as they can. So Tokyo session is where those market participants are the most active. So right now, I would say where we are right in this second, you have Europe. And it doesn't seem as though Europe is all that interested in really buying up all the gold. So if you go and look at what happens during the initial stages of the European session, you can see multiple times the early sessions of the London session is quite sideways on gold. You know, it really struggles. Even if it does have these little upward pushes, it's short-lived. And then when you get into New York has these strong movements. Even if it is bearish, it doesn't matter. It's still there's this I want to buy gold. So you have on Asian side, you have all of these countries really want to buy and hold gold, and then on the opposite side during the New York session, you have the New York like participants. You have Canada, you have all of the South American countries, which maybe Venezuela and so on play a role, but it's predominantly the US that wants to buy and control gold. And then you have the London session where these two participants are either going to bed or about to wake up. So that's why you have like this little segment in between where it's very quiet, there's movement, but it is either subdued movement or not volumetric or not very momentous. And then you get these momentous movements. You get these momentous movements during the Asian session and then the New York session. That's generally why. Scribbles, Asia is a good session for gold. I don't know why. Just told you why. Martin, I hope you are right, Rich, because I'm still in the trade with gold. Yeah, when it comes to gold is a bit slowed at the moment. So I don't entirely know exactly what it is that you're going to be looking for on your gold trade, but to me, I'm waiting for either a bit of a pullback, pick up some buy orders that kind of got stuck here that didn't really get picked up because we moved so volumetrically through here, or potentially down to yesterday's highs as an example, and then continue higher. But if it just straight starts pushing from here, I would not be surprised either. You should have been unbiased towards gold. That's the thing, is like I try not to trade with a bias at all. I'm very much a reactive trader. I see, I react, and that's generally how I go about things. I think a bias just does not suit me, because then I'm marrying that bias and I'm saying, you know what, it's definitely going up, and if it goes down, then I'm going to be like, you know what, it's gonna turn around, and I can get myself into very deep order by marrying my bias. So
Hello.
yo, what's up, Samir? See, you were sitting there in the
How are you?
patiently.
I was waiting for someone to add me.
Yeah, Remy, you know how to use the private chat function.
Yeah, I've messaged there also. Maybe Rami just skipped
Me.
it, so I texted on WhatsApp.
Well, I'm glad to see you're in. How have you been, mate?
I'm good. How about you?
Today has been a struggle. I'm not going to lie. Today is a struggle. I'm not trading from my regular spot. I'm at my brother's house. I'm using all of his equipment. So his camera, his microphone, his computer, his everything. Thank you to him for allowing me to use all of this stuff. Because he's got solar, and we've had some midnight shoppers that decided that they really wanted copper. So they stole some copper going to a substation which feeds our area with electricity. So our municipality had to go and replace that, and it takes a very long time. So it's still not back. So, and it's been hours.
All right, but you are here
I
on the
am,
stream.
and so are you.
Yeah, exactly.
I was
Anyways, it
I
was
was just going through chat a little bit because I fell a little bit behind. So do you want to help me answer some of the questions, mate?
yeah, for sure. Let's see what chat has to say. All right, let me read some comments here. Hello, guys. First of all, unbiased trader. Hi, bro. How are you? Have you banked today? Yeah, I took longs on Euro USD. I'm still in this trade, and I think it can go to the upside. I'm close to the TP actually. Okay. Are you frozen?
No. I'm just reading. Sorry.
I'm like, am I
I went
frozen or my
into a
internet
little world.
connection?
No, I went into a little world.
I was like, what happened? Anyways, so yeah, I took a trade here on Euro USD. As you guys already know, I am a big kind of impulse and correction type of trader. So I saw this a good impulse and some kind of correction. I got involved in the trade here. And if you go to the 2 hour, why I took this trade, you might be wondering. This was a very good support area. As you can see, we just took a support from here, and of course how I came to know about it, it was the correction pattern. And yeah, just took a trade here, got a little bit of drawdown, just left the trade. My stop loss was here. Why my stop loss was here? Because of this small order block type of area. So I just placed my stop loss below this in case price try to test this area. So price indeed tested this and just got in my favor. I would have secured 1 to 1.5 to be honest, but I am in the challenge phase, so I need 1 to 2 to pass it. So let's see. Hopefully, it happens live on the stream. So I will be passing phase 2. And on
Oh,
other
that would be
hand,
awesome.
actually, it is phase 1. I'm sorry. On the other
Oh
hand,
well,
I
now
just
I'm
got
not enthused anymore.
yeah, yeah.
No,
I
I'm
just
not so
got
enthusiastic anymore. I thought you were going to go to phase two and get paid, mate, and now it's just like it's phase one. Ugh, no, mate,
yeah,
congratulations.
yeah.
But
I just
it's
got a
pretty
payout
cool.
from the Fivers today. I wrote up and received an email saying you got paid. So that was really good feeling. And yeah, let's see now what chat has to say. Maybe we can drop some analysis. I'm sure you have dropped the analysis on gold. I was seeing you was on the chart.
Yeah, we were having a look at gold. Um, there's a question here from Oakley Styles saying best pair to trade for beginners. What would you suggest, Samir?
If I look behind, I think the most majority of the times, what really had played well for me was major pairs. And what was the pairs? Euro USD, Euro JPY, all these pairs that I have right now instead of this gold. Avoid this. Let me add in the other section. All these five pairs that I have, they moves in a very good way. Of course, sometimes GJ and EJ, they are in a big correction type of zone, like you can say this type of area, but when it moves it really gives you good clean trend, and you can really catch a big momentum here. And USD JPY, I think it is a very good pair. If you ask me, I think go with the USD JPY or Euro USD. Two pairs. USD JPY is really good pair. It follows market structure in a very good way. I have observed it, so it is just my personal observation. Go with the USD JPY and Euro USD. I'm giving you two pairs. Sometimes if Euro USD is in a range or something like that, you can focus on USD JPY and vice versa.
I would agree with Euro. So Euro USD. It is the most liquid pair. It is the most widely traded. It's generally got the best spreads. So it's quite forgiving for everybody, I would think. For whether you're a scalper or you are a swing trader, I think Euro USD, you can incorporate any sort of strategy on it, and you can find something that works for you. So I would
Yeah,
definitely
exactly.
say Euro USD. GU, I would say, is a little bit more temperamental. I think GU can be unforgiving sometimes, but I feel the
Yeah.
same about the yen pairs as well. In general, the yen pairs have always been pretty good, especially for going long. They're horrible for going short. But when they do start going short, it's short lived as well. So for me, the yen pairs have been a bit unforgiving, especially if I've tried to play both sides of the field.
I think
So I
for
would
me
say euros.
it has been 50-50 for me if I talk about yen pairs. And the euro side, I think, yeah, it is 50-50 again. But indices side, I've seen a really good success. I would say maybe sixty
Same here.
forty.
Yeah, I
Yeah.
would say indices as well. But would you recommend it for a beginner trader?
I think yes, I will. Why? Because there is some points that I want to mention here. First point is the timing thing. You already know when these indices start to move in a impulsive way, which is of course NYSE. And you have the time window. Now you are restricted in this session only, because if you want to catch good momentum, you know that it will come in NYSE, and then as your time frame or time window is restricted, you are not allowed to take multiple trades. You are only allowed to take one or two trades in that particular session, which automatically eliminate a lot of bad things that you can do, which is over trading, over risking. Of course it can happen in this time window also, but somewhere you can manage it in effective way. If I talk about forex, it is open 24 hours. You can randomly punch trades here and there, but here you are restricted to one thing, which is time window. You already know the price. If even if I don't know what strategy you are following, You know that price is going to give you momentum in this particular time, and now you will make your trading plan around this particular time window. I think which can eliminate a lot of things. uh, some people might be arguing with me that it moves in London session also. Yes, it does. But if you want to catch the big moves, something like this, impulsive moves like this, you will get these type of moves in NYSE only. So with that being said, I think indices is definitely for beginners also. But again, you have to learn about it. You know what kind of concepts is working in that particular pair or in that particular indices. Again, it comes to the experience. I think trading is all about experience. You experience a few things here and there, and then you tweak few things here and there, like what is working, what is not working, and then you make your plan. I know it is a boring thing, but I think this is the only way you can do it. If you're a beginner,
Mm.
have experience, stay with it, make a trading plan, do the right things. What are the right things, you might be wondering? Right things is sticking to one or two pairs, you can stick to indices. And another right thing can be focusing on one or two strategies and not doing over trading, over risking, risk management. All these things are right thing. If you stay on this path, and I think with experience your level is just gonna grow. Maybe nowadays, now you might can make $200, and then step by step, you will climb higher. That's happened with me. I think that is the same thing that happened to every trader. Slowly you can climb, but stay on the right path. And I already have mentioned few key points here. You can follow those things. I think that is the only way to go, because at the end it is just
Mm.
experience, and you don't want to have a bad foundation that will make your experience little bit bad. You have to follow the right things so that you learn from it, and your experience, you gain that thing, and slowly you go in the right way.
Yeah, I agree with that. I think the indices is a good potential view for or viewer, let's say, for a beginner trader. First and foremost, you have to consider what is your price of entry. What is your price to play, basically, which is commissions, spreads, that kind of like stuff. So it's those prices that you generally can't get away from, and a lot of people don't generally incorporate that into their trading strategy necessarily. So when you're trading CFDs, in general, you're going to have commissions with all of the Forex pairs. But if you do a CFD version of an indice, you're not paying any commission with the fivers specifically. Now, it's the same when it comes to futures as well. There's a price to play, but it's not going to be with commission. So that is very forgiving. Okay. However, you can sometimes have unexpected spreads with indices on CFDs specifically. So in that case, I would say, you know what? Look for an indice that you can do your background testing on. So you can go and, for argument's sake, take NASDAQ. NASDAQ is the 100 US Tech 100. So Meta is there, like the stock price of Meta, Facebook. Amazon is there. You have all of Nvidia, and MSN, all of these companies, these big tech companies, and even the non-tech companies that are there. You can go and have a look at their stock price, and you can see, we're busy in a decline. And you only have to look at those things and then incorporate that with your technical analysis on NAS, and then you can trade that. But if you're doing, for argument's sake, euro, dollar, EU, you have to understand how strong and how weak the euro is. You have to understand how strong and how weak the dollar is. You have to understand geopolitical risks between the two countries. Is there areas where the US is involved with something? So you start branching out a lot more when you're looking at assets, like Forex assets, rather than just indices assets. So I think it can be a lot easier for people to just focus on, for argument's sake, one asset. Like, let's say you're a stock trader and you only focus on Nvidia, and you only trade NVIDIA. You only have one thing to look at, and you know when they're going to have their status reports. You know when they're going to do their financial reports. You know when they're going to generally have new items that they talk to the market about. They have consumer shows where they talk to the to consumers about, we're planning on bringing out this new item and whatnot, and you can then have all of that data all in one place and you can just trade from there. So I think that indices, for that sake, can be good for beginner traders if you want to get your finger into the game and you also want to kind of learn more about stocks, you want to learn more about the company itself, you want to learn a little bit more about how trading works and so on. So I think indices can be very forgiving for that. So I just want to clarify this. So Scribbles, can you confirm, please, it's safer to only take trades from the home you have set up for your account, on your account being? So let me clarify this. I don't think that you will ever have this as an issue with the Fivers, ever. Okay? I honestly think that they could care less about where you're trading from, so long as your account details stay your own, and you can then tell them, hey, listen, my account was hacked. Then maybe they can help you get your account back. But in general, I don't think that the Fivers would ever have a problem with you trading in a different place. My reference was more towards the other funded prop firms that I trade with. I know of one of them that I'm trading with, someone has had an issue where their account got banned because of trading from a different location. So their IP address didn't align. Now today I'm trading, I'm streaming from my brother's house, which is away from my own home. Now I have a live stream account with the Fivers, but I don't want to bring my other accounts as well. So today is effectively a no trading day for me. So I could have brought my Fivers account, the 5K live stream account that I have, but I just didn't want to, I was just not in the mood, let's put it like that, to even consider bringing it here with the potential that there could be a problem. Now, I know that in general there would not be a problem, but I'm one of those people where if I can avoid something, I will avoid it. So I don't want to give anybody any reason to look at my account and go, hold on, what's going on here? So I know that with the other funded accounts that I have, that can be a problem, because I know of people that have had issues when it came to trading from different places. But I know that the Fivers would probably not be a problem whatsoever. But because today has already been I'm all over the place, I'm not comfortable where I am, I'm not trading, or I'm not like at my trading setup and all of that kind of like stuff. That's the main reason why I didn't bring my account forward. So just to clarify, you will never have this problem with the Fivers. And if you do, and you do talk to them, I'm 100% sure that they will understand the circumstances, so long as you're being honest and not, trying to do them up, do them, I almost said a bad word. So long as you're not trying to screw them, you can talk to them and it should not be a problem. But as always, go and ask in the chat of the hub when you're talking to a service agent. Go and talk to them and ask them, listen, will this ever be a problem? So rather get clarification from them. Scribble's asking, does EU not want gold because it has its own? No, it's just that in general, the volume, the amount of participants when it comes to gold, I wouldn't say that the EU doesn't buy gold. They do. I just don't think it's to the same volumes as, for argument's sake, China, Russia, India, Australia. So they have a very strong focus on buying up gold. Efren saying, do you expect gold to fall aggressively down to at least 4,800? I don't think so.
Yeah, historically, it has never fell that aggressively. It has been in a big consolidation or kind of a sideways market, but it hasn't really fell that much. If you see, this
I
was
mean,
a big
it's not
consolidation. Now,
impossible. I
yeah,
mean, it's not impossible, but
I do see this kind of consolidation will happen. I don't know when. Then again, another higher move. It is.
mm,
Let's see how many months, years it was. 100 and it is 1277 days. How many years it is? 336, 3 years almost. No, 4 years
yeah,
almost. So for
it's been
four
so
years,
bullish.
yeah, for 4 years it has been in consolidation, and after that it has been in a very good bull run. But if a basic market structure or these kind of things, we know that after an impulse there is a small pullback or something like this, and there are a few market condition which is downtrend, uptrend, sideways. So I think gold is also an asset class which also behaves in these kind of waves only. Maybe in future we might can see some kind of consolidation on the higher time
Mm,
frame, the weekly maybe, or on the monthly. I don't know when it will happen, but as per the basics or foundation of the market structure or market condition, we know that one market condition cannot stay forever. So we cannot say that this bullish momentum is gonna stay forever. There might be some pauses, and in that pauses you will see some sideways market kind of condition. And at the same time, you should not think that it has gone too high, let's just short it. That is not really the thing that will work in a
mm.
long run. And right now, of course, we are bullish, and let's find the buying opportunity. This was a good breakout right here. It was a good buying opportunity right now. I would see something similar to this happening somewhere around here, maybe something like this. That will give me more confidence that okay, we have more fuel now to go to the upside because we have already consolidated. So now more buyers can step in. But I don't see any opportunity on gold other than this one. This was a very good buying opportunity right here. I missed it. This was a buying opportunity. I missed it. Now I want something like these two things, either retest or some kind of consolidation like this. But I am actively in Euro USD buys, and let's see how it goes. I want it to hit my TP, of course. So let's see. But I also took a GJ sell this morning as I'm having trouble in my sleep. So I was, seeing the Asian session. So why I took the trade, let me explain you. As you know, I have this support area, and this also kind of resistance area, and this also kind of an area. Just let's just call it rejection areas. So we know that price on currencies, it is a good thing about currency that it doesn't really go forever. It moves in a wave. As you can see, it is not like gold, it moves in a wave. So we know that some areas will get respected, and I saw there was a couple of rejections here gone on the 30-minute. Price was trading under this level. I draw a trend line right here. Price was rejecting this area. I was like, okay, if price is rejecting, what chart is showing me? I don't want to be stubborn like, okay, this I have to buy, price is going up. But what charts are printing, or what kind of patterns I'm seeing based on my levels or based on my analysis? I'm seeing prices rejecting from here, prices having trouble from here. So I shorted it here, and my stop loss was here. I booked around 1 to 1.5 risk to reward somewhere around here. In the morning, I took this trade, and right now I took that risk, that profits that I made. I risk that profit here, and hopefully I make some decent money here. Of course, it is phase one; it is not live account, and yeah, let's see how it goes. Other than that, I don't see any good opportunity. Let's do some analysis. Okay, we have gone above this level, so definitely this is the next level where we can go. And why I have this level? Because of this rejection area. As we are closing above, it means buyers are interested. Now how we can buy? We want some kind of retest, and then we can plan for the entries, or we can just buy this breakout. That is also a good area. If we close like this on the 30 minutes, if we break this, we can place our stop below this area, so that even if price try to retest this area, you are still fine, and you can easily secure 1 to 1.3. I would like 1 to 1.5, but yeah, it is also a good trade, but
Yeah, it
it
looks
is
really good.
yeah.
Does look really good. I just saw. Sorry, guys, I got behind on chat again. Yeah, Trump is busy talking. He's been talking for the last 15 minutes or so. Not seeing much change in the market though.
Yeah, we just have a little bit of momentum on gold.
Gold had a
Euro
little bit of a push, but
Yeah, this was a small three candles here on the 5 minute, and yeah,
uh, EU had another bullish candle during this, or when that news came out. GU had a little bit of a bigger one, but it's not changing the direction whatsoever. Like it's still within this little bit of an upward channel that we have here. It's still a little bit, showing signs of bullish potential on GU. So still, the direction is still unchanged by the news. The same with euro as well. Euro is bullish, had a bit of a pullback, another bullish candle. This bearish candle, I don't know. It's 13 minutes. It's only just opened up, and it's a little bit stronger bullish, stronger bearish. Is a potential for it to pull back to over here potentially. Alternatively, we could have this little area over here as well. If it's going to start pulling back on EU. But yeah, I think that's the news didn't really have any impact all that much. Yes, there's a question here for you, Sam, from Loving Nature Guy saying, "Banks with Sam, I heard that funding ticks is closing down. Is this true?"
yeah, it is already shut it down. I saw a post, so yeah, they have stopped their operations. I don't know, man, but that's why I always on my Instagram, my every post when people are asking me which platform to go with, this that, I always mention this thing. Always go with the one who is here from or since a very long time, which is the fibers. We are here since 2016, so we have a good track record, or whatever you want to call it,
Yeah.
and firms are popping like every day almost, like future firms, like kind of CFD firms. So I don't know why people fall for the one who is not even having a track record in the market. It is just me being a trader. You are putting your hard work in a firm which is new, and you don't really know if what kind of infrastructure they have, and this and that. Your hard work might can get to waste. So me as a trader, I want to go with the firm which is having good track record, like the fibers, of course, and I know they are having good ratings here and there. So I do these kind of things when kind of a research thing when I am choosing a prop firm. I think you should not fall for the discounts here and there, and because you should put your hard work in some firm which is here for you to for your support. If you make profits, they pay you. So don't go for the new firms here and there. I'm not really trying to kind of say a bad thing about new firms, but I think that is the reality. Being a trader, I was rejected by a firm which was $12,000 payout. I first time made a five-figure payout, and imagine the feeling. I put it the hard work in a firm which was new, offering the discounts here and there. I fell for it. It was, I think, 2 years back. So I learned from my mistake, and you can learn from my mistake. always go with the reputable one, which is the fivers, of course. And yeah, these live streams, nobody's
Yep.
doing this. We are
I
here for
couldn't have
you.
said it better myself, mate. Like the
Yeah,
Fivers is literally the best. Just literally the best.
just try it. It is very smooth. Their operations, their support. Even if you have any problem, which of course you are not going to have, because the infrastructure we have, the automation system, all these things, all these things for you guys, you're not going to have any problem. But if you face any issue, or you need a support, try our support once, and maybe you can try other support, and then you can see the change.
Look, when it comes to any prop firm, I would always say make sure that you know whom you're getting in business with. All right. So go and do your research. Go and look at reviews. Go and look at what stands out and what doesn't. But also at the same time, use a little bit of common knowledge. Like use a little bit of like this brain power of yours and think to yourself, how does a prop firm operate? How does a prop firm make money? All right. And if a prop firm makes money solely on evaluations, what incentive do they have to have you be a profitable trader with them? You're going to cost them more money at the end of the day than they're going to make from the evaluations. Okay. But if they're a prop firm that has proven that they trade along with you and that you get refunds on your accounts, that you know on your evaluation accounts, and they're a book, common sense would say this prop firm really actually does want it's better for them if I'm a successful trader than me not being a successful trader. Now, every company has its like way of doing things, and I would generally go and sit down and really think about logically what a good company that only wants to make money is going to do versus what a good company that wants to make sure that its participants are making money as well. So that's all I'm going to say. And in my opinion, and you can take my opinion for what it is, and it's just an opinion, I believe that the Fivers is the best prop firm. I love their rules. I think it's very fair. I love their programs that they have. I have never had an issue with a singular thing regarding their accounts ever. The Discord is amazing. They have this live stream, which obviously I'm a part of, so I'm a little bit biased there. But the stuff that they do for the community, I think, is well and beyond what they needed to do to prove that they're a good company. So
Yeah, exactly.
everything in my mind just screams best prop firm. Why would I want to go elsewhere? Now, that being said, I do have other prop firms that I am funded with, but that was before I started trading with the Fivers. So you have to kind of like take that into consideration as well. That was before I found the Fivers. Lazio Bonnet saying, "Hey Richard, are you from South Africa?" Yes, I am. I am from South
Wasim
Africa.
have a question. He just bought a 2.5K account, and now you don't know how to log in. So let me tell you how to log in. Of course, I'm not gonna show my
Oh, yes.
dashboard here,
Yeah.
but I'm just gonna share it in words. Hopefully, you catch it. If you still have the problem, you can of course contact the support. But here, I will try to guide you. So first thing, you just have to log in your dashboard, and second thing, you have to click the tab which is saying dashboard, which will take you to your account analytics, all these things. And the third thing is there is gonna be a key. Let me show you if I can,
A
maybe.
literal little drawn key in purple.
Yeah, little drone key, kind of the one you use to open the locks, that kind of key. So you click that, and there you will see your account details. You copy that, then you have to go to your MetaTrader 5. You can download it in your Play Store or App Store, then search 5. You will see 5 percentage. You will get the get the login kind of server where you have to put those details in. So that is it. You will be logged in your account. I hope I cleared your doubt. If you still didn't understood it, you can let me know in the chat, and I think support can help you. But still, if you didn't got anything, I'm happy to repeat or maybe give you a brief about it. You can let me know.
Yeah. Min is asking, are we allowed to trade today? Yes, you are allowed to trade today. There was red folder news with the dollar at, okay, so this is my time, 15:30, so 3:30 in the afternoon. We had President Donald Trump speaks. So no limitations after him speaking if you have a high stakes account. The high stakes account has a pause, you can say, a do not trade red folder news pause. And that pause is 2 minutes before and 2 minutes after red folder news. The red folder news that in question is from Forex Factory. So forexfactory.com. Every time you see a red folder news like this, specifically President Donald Trump speaks, the asset or the Forex pair that is connected or impacted is the United States dollar. So any major pair, so US connected Forex pair, you cannot trade 2 minutes before and 2 minutes after this news event. So the news event in this case was 3:30 p.m. So that means that for 2 minutes before, so from 3:28 p.m. until 3:32 p.m., so just 4 minutes, that 4 minutes, you're not allowed to open a new trade. However, if you have a trade running, when the news hits and there's a reaction, no problem, don't worry about it, it's not going to impact you whatsoever. You're just not allowed to open up a new trade. And this new trade can be a pending order, a market order. So it doesn't matter if, so long as it doesn't initiate a new trade within those 4 minutes, you won't have a problem. The Fiverr's site is down. I haven't checked that.
It was yesterday, but now it is fine. I have one tab opened here, and I'm on my dashboard. It is fine. Yeah.
Peter Lazaro is asking, any advice on AUD JPY? So JPY pairs AUD JPY. Let's have a look. Let's start on the daily. Ooh, this is very, very, very bullish. Where's the all-time high? So all-time highs is up all the way over there, which is 109.33373. Is that all-time highs? Yeah. All right. So we have been very, very bullish on AUD JPY.
Let me see if there is any error.
We've had a little bit of small pullbacks over here, but in general, it was short-lived pullbacks. We've continued pushing higher, small little areas of retracement, which gets tapped into and pushed up yet again. I think AUD JPY may just be on its way towards all-time highs. It's so close. Yeah, I mean, this is just when it had this downward push. This downward push was cancelled out over here, and continued pushing bullishly from there. So I do feel like we are definitely very bullish. So personally, I would, if I had to, I would scalp shorts with little pullbacks like these ones. So if there's follow up like this one, I would try and scalp a little bit lower. However, I would most probably look for buys after a bit of a pullback as well. We've already broken yesterday's highs. So this is on the hourly. The hourly is going to close now in the next minute. There is a potential for us to come and retest the high and then push off of it, or we may fail to test it and push through to to come to this little area of consolidation over here, test that, and then maybe start pushing up above. But I'm quite bullish on AUD JPY. So I would say look for a potential area where price pulls back towards, and then start showing either slowed downward momentum, or at least shows that it wants to carry on pushing up higher before I enter. The problem with entering after a breakout like this is that there tends to be a bit of a pullback. Depending on how large your stop loss is or where you place it, it might get tagged before it continues pushing up higher. So in that case, I would look for areas. Let's go down to the 15 and look for, just straight here. There's an area of consolidation where we've had a breakout. There's a potential area right over there. We've had a little bit of consolidation over here as well that had a strong breakout and a singular reaction off of. That may also be an area to be tested. What did I mark up here? Is this on the daily? Yeah, it's that pullback on the daily. So I think there is potential chance for slight little pullbacks and then a continuation higher yet again. So very bullish on AUD JPY. Do you agree, Sam? Or do you have a different opinion?
Yeah, I agree with you.
Do you agree, Sam, or are you wrong?
No, I cannot disagree with you. You are the man.
No, it's very clear. It's very clearly bullish. I would
Yeah,
wait
that is a
for
nice area that you have.
Say again.
That is a nice area that you have. I would have done the same thing.
This one here.
Yeah, price can pull back. Maybe potential longs again. Yeah, exactly.
Yeah, I definitely think Bank of Japan meeting tomorrow. Yes, I wanted to say that. So not tomorrow, day after, Friday. On Friday, we have the Bank of Japan policy rate, as well as the monetary fund change policy, the outlook report, as well as the conference. This is all tentative. So this news can have its impact anytime during the Tokyo session, but in general, it should be before the GBP news. So tentative news, you are free to trade them if you have a high stakes account. There is no limitation. There's no 4-minute rule when it comes to the tentative red folders. So you can trade them.
How to link my account to MT5? Very simple. Download the MT5, copy your credentials, paste in MT5. Simple. If you have trouble in finding the server, it is in the same panel that where you have your credentials like login ID and password. Just copy that and paste it in your MT5.
Here's a good thing from Remy saying at Primal Light, saying that he's still getting an error. The website and trading platforms are fully functional. Trouble loading, clear your cache. So if you have a like, let's say in this case you're using Opera or you're using Chrome or whatever, you should have a segment that you can go and clear cache. That generally does help. What are your thoughts on GU for New York today?
GU, I was planning a buy here. It already was a good trade, but as I am in EU, I was not able to execute this, but I definitely would have taken the trade. I've already explained you the trade. I think I didn't. But let me explain you why I was having this risk to reward tool here. As we have this support, we go on the 1 hour price showing you momentum here. If this was about to reject, it should have rejected from here. It shouldn't have closed above this area. So 30-minute, as you can see, trying to print kind of a bearish candle, but again bias took in. 15-minute, as you can see, price finally closed above. So this was a good area which you can consider that price can go to the next area, which is this. And why I have this, just simple, some rejections area I have marked. As you can see, price some rejected from here, so this was a, that's why I marked here. my level. But if you ask the outlook, let's go on the daily time frame. Okay, daily time frame has finally taken the liquidity of this daily candle, and definitely we can now fill this wick to the upside. So I am bullish on the base of the daily time frame. And even if you draw a trend line like this, so price has already broken the trend line, or it was a correction type of thing. So after the correction, what you see? An impulse. So definitely we can see the impulse to the upside. We can expect it on the base of what? Base of this market structure. As market is bullish here, so we definitely can expect a bullish impulse to the upside. But for that, let me see the weekly candle, and weekly is also the bullish on the higher time frame. As you can see, these legs are showing you price is going higher. Yeah, there was small kind of a pullback, deeper pullback, but now again price is finding its feet to the upside. And definitely this is the area where we can go. But now we have to see where we can enter. Going to the 4 hour time frame, we have broken this trend line, which is some kind of a correction. We
I
have
think there's some
retested
news
it.
that just came out.
um, it is at 8:30 right now. There is no news. 8:30 there is news, my time zone, of course.
Yeah.
So yeah, I definitely see bullish engulfing here, so definitely you can look for buys here. Looks good to me. If you want the tighter stop loss, you can keep it here,
Look
but
at the reaction on euro, EU.
okay, yeah, we are just pulling back.
And
I don't know.
look at gold.
Yeah, there
I
was
think
a huge reaction. 300
I
pips.
think I think something was said by Trump.
Yeah, yeah, yeah. Exactly. As it's the speech, so he might be playing here and there with his words. So that's why
Mhm.
we have some huge reaction here.
Yeah,
So yeah, let's
even
see.
NASDAQ starting to push up. Gold is starting to push a little bit lower.
I'm definitely seeing Nasdaq filling this gap. Maybe today or tomorrow. Let's see.
Alvin, Trump is currently speaking at the World Economics Forum in Switzerland, in
Trump talks
Davos.
about Greenland. I
So
don't know.
yeah, talks about Greenland. Yeah, so a little bit of a delayed reaction, but he's whatever he is saying right now is causing people to freak out.
Yeah, I don't know what these politics guys want. Greenland. Anyways, no comments. Trump has shell company making money as he speaks. Maybe.
Possible. It is possible.
A lot of things going
Um,
in the world. Small thing. But that's
Primal light, damn it, Trump, just stop talking. Yeah, that's the thing is like say about him what you want. He moves the market, mate. When he talks, market moves, market reacts.
yeah.
So I would say wait for him to finish talking and then trade the aftermath. Trade what happens afterwards. Yeah, very true. Crazy market and crazy Trump. But that's the thing. We expect this now when Trump speaks. If he's going to have some sort of meeting or some sort of tweet or something, it's going to move the market. So in general, I think a safe bet would be to either, if you want, stay out of the market when Trump has a speech, or if you know that he's going to have a speech, stay out. Obviously, it's going to be a little bit different if he has a tweet or he suddenly in the middle of the morning hour sends out, I don't know, like a Twitter post or something. It's difficult to stay out of the market then. But if you know that he's going to speak, either wait for the whole key point discussion to be completed before you start trading, because I think at the end of the day it's going to save you some heartache, because as you can see he can move the market. Now if you were assuming that US tech NAS was going to carry on going down and you had it nice and planned. It was going really well. You were almost close to take profit, and then all of a sudden you have this wick that just runs up and then takes out your stop loss. You're going to be very upset. So, if you know, stay out of the market. If you don't know, there's nothing much that you can do about it. Volatility is money. That is correct. That is correct. Trump is the biggest news these days. He is 100%. But yeah,
exactly.
Volatility is money. That's where you get the most of your movements and whatnot. But there's such a thing as too much volatility. There's such a thing as being on the wrong side of volatility. There's how do you manage risk when there's crazy volatility? So you make money with volatility, but then you better make sure that you're on the right side of the volatility. Otherwise, you're going to cry.
Yeah, that is gonna come with experience. If you're a beginner and you have you are thinking that you're gonna double your account, or maybe you're gonna make 100x, it is not gonna happen. Let me give you a reality check here. I know the volatility, it can give you crazy moves. As you can see here, Euro USD is going crazy here. Let's see what it is gonna do. This is my stop loss. I don't move it to break even. Are you a break even trader? Like you moves your stops to break even?
No, it's take profit or stop loss. It's either or.
Same here. From since day one, I've been this kind of trader. So that habit has stayed with me since day one. Okay, Rich is gonna be back. All right. Let's see. Gold is moving so fast. Let's see what gold is trying to do. Yeah, exactly. Why? Because Trump is speaking. There was a speech. There is a speech actually. Hello, Nico. I remember you was yesterday's stream. Am I pronouncing it right? Nico. So I'm sorry if I said it in a wrong way. I am in this trade. I'm not gonna move it to break even. Let's see what it happens. So what it can do, it can just hit my stop loss. It's okay. So it is what it is, But let me draw this level. If I have the right level here. Yeah, price is rejecting from this area. Let's talk about gold. Let's go to the 30-minute. Let's go to the 1 hour. I think if we can close below this area, we can definitely tap this fair value gap. So, but the momentum is so fast, and we don't even know what to do now. Okay, let's take some questions here. Crazy market and crazy Trump. Yeah, man. These type of markets, if you're in the wrong side of the market, your stop loss may can get slipped also. So you should be mindful when you are taking the risk. So you should take the risk which you can afford and which is not causing you that nervousness or something like that. So take the risk which you are comfortable in. Here I am chilling. I have a risk on the table and I am comfortable with my stop loss. What's the worst can happen? I can lose my profits that I made from GJ. It's fine.
Scripted asking, is this because Trump is talking right now? Yep, 100%. That's why I prefaced it earlier. When, Trump's seeking immediate negotiations to acquire Greenland 7 minutes ago. So this is why I kind of stay out of the market when I know Trump is going to talk. You don't always know what he's going to talk about, but you do know that what he's going to say is potentially going to move the market. So this is gold right now, and this is a 5-minute candle followed up by an attempt to push up by another 5-minute candle. So this is really bad. Lost 10% of gain I had today. I got hit badly. So what I would suggest is for the rest of today, maybe
take a break.
consider not trading at all.
Yeah,
Step away from the market a bit. Don't allow emotions now to take control of good practices that you have.
exactly.
So step
I
away
have
from
been
the market.
there. Primal Light, you lost 10%, and I have been there. I lost some senses, and I just blew my account. So just stop, take a pause for the day, maybe in a day or two, maybe in a week, you can recover it back, but at least you will not build some bad habit and that might can ruin your account. 10% is somewhere manageable if you have the live account, of course. And in a long run, definitely 10% is manageable. But if you lose more today, then maybe it will be hard to manage. So, I mean, it is okay, just take a break. I broke even from gains I had today. Yeah, it is fine then.
That's
It is
okay.
fine. Yeah.
Yeah.
Maybe you can learn when there is a speech, you just not trade. That can be a lesson for you.
Yeah, that's why I prefaced it earlier. This take this take this as a learning curve, or imagine instead of you thinking of this as a loss day, this is a learning day. So yes, you had 10% gains. Yes, that 10% gains was given back.
Yeah,
So
exactly.
consider what led to that 10% being given back. It was a circumstance outside of your control. The circumstance outside of your control was a person giving a speech and the market reacting according to the speech. Now, this is not untypical of the market. This is stuff that has happened before. It has happened many times before. So take a leaf out of my book and say, you know what? If there's a red folder news where Trump is going to be speaking, I'm not trading. I'm not participating in a trade. Because if you consider the way that you're feeling right now, you might have this severe feeling of loss. You might have this severe feeling of, I need to get it back. So revenge. You might have this severe feeling of, oh, it's going to go in this direction forever. FOMO. You don't want to jump in on it. I would severely caution against that because, first and foremost, we have no confirmation that this is going to carry on happening. What we do know is that this is an impulsive move. That we know. Because we know this from the fact that it is directly caused by a speech that a true market mover has, which is Trump. So we know that this is impulsive. Do you want to just jump in on an impulsive move? I don't know. Is it according to your plan? If it is, then yeah, sure, go for it. But if it's not, why would you want to jump in on this impulsive move? It can just as easily now absolutely do the opposite. So, like I said, days like today, with Trump speaking, I'm not trading whatsoever. At least from the time that he starts his speech, where's the camera? From the time that we start the speech up until it's completely done. I'm not trading in that whole segment. Yeah. And it's going to save you a lot of heartache, I think.
All right, we have questions here. Let's take it one by one. Agree, I just decide to stay out of market today. Tomorrow is another day. Exactly. That is what kind of mindset a trader should have. If
Yeah.
something is there that can maybe cause you harm, then you just don't go there. It is very simple. And bro, how to check particular pair news? Particular
So
pair news, you can go to the, yeah, you can cover it.
So you can go to this website over here. It's called forexfactory.com. It is the website that the Fivers uses for its high stake 2-minute rule, high stakes rules. You can then go to the calendar section. And by the way, this is free to use. You can use Forex Factory for free. You can go to the calendar section, and on the calendar section, you will see currency display here. Now, if the currency that you're looking for isn't here, you can go to the filters tab on the right-hand side and make sure that all of the currencies are selected or ticked, and then you just apply the filter. So then you look at whatever news is associated. So CNY over here is the Chinese yuan. So any news that is connected to that will affect the Chinese assets. So to give you a very good example, here we had red Canadian folder news. So CAD is Canadian dollar. CAD news, red folder. Now, if I go back to TradingView and I go and look for any of the CAD pairs, so just to start off, we have US CAD. I think it's this one. Yeah, US Canadian dollar. So if it has Canadian dollar in this top section, so US CAD, CAD, NZD, doesn't matter. If it has Canadian dollar associated with the asset, that pair will be affected. So in this case, US dollar, Canadian dollar, this is the quote currency. The quote currency is Canadian dollar. It will be affected by that news. And all of the Canadian pairs, so GBP CAD as well, pound CAD will also be affected by it. If you go to CAD CHF, it's going to be impacted by that news. So that's how you check. So you correlate what you see at the Forex Factory. You look at the currency that is in question in this case, and then you look if it's a red folder, and then you go and look at any Canadian pair, whether it's Canadian pair first and then a secondary pair, or it's a first pair like the US or pound and then the Canadian dollar. So long as one of those Canadian dollar is either in the first or the second position of an asset, it will be affected by it.
All right. Would this be a good chance to go for buying opportunity near end of the speech? I don't think so because right now we're in the impulsive phase. We don't know. The impulse phase can continue. You need some kind of rejections or some kind of analysis, to co-align with your trading plan. So right now, if I was seeing the charts, there is nothing that is giving me the sign to enter. So I would just stay out of the market.
Yeah. Look, if I'll preface this, if you do have a strategy that is built around the idea of trading on continuations of impulsive moves, then I would say make sure that whatever is happening in the market right now falls exactly in line with what your strategy is, and then trade according to your strategy. But I would always preface caution around impulsive moves, particularly around a news event, because those news events, especially if it's like like today where Trump is speaking, there's a whole load of subjectiveness that comes from the speech. There's some people will read under the lines about what Trump is saying. Some people will go directly with what he's saying and then react according to that. So there's a lot of emotion and there's a lot of speculation centered around these news events. And the impulsive move can be very long-winded. So we can have an impulsive move that just carries on, but then what we have afterwards is we have like this sideways action, and then the market decides, hey, listen, no, I actually want to go down. So when it comes to the impulsiveness, always tread carefully, always. Mo is asking, can I ask how much you risk on your prop accounts per trade on evaluation phase? Very good question. Samir, how do you normally approach risk with your...
Okay, so it is a good question indeed. And how much I risk? It is based on the confidence level that I'm having. If I'm on a losing streak, my confidence level is not gonna be that huge or that much, which will automatically kind of make me to reduce my risk to maybe 0.5% to 1% to gain my confidence. If I'm having wins losses here and there, I'm overall in green, and my live account is making payouts here and there, so I will normally risk 1 to 1.5%. I think 1.5%, I don't go beyond it. And even my first account was passed with this risk management. I was risking 1.5%, and I was targeting 1 to 1.5 risk to reward. That's how I passed my first challenge. And I think it is a healthy risk to reward, a healthy risk and healthy risk to reward, paired with the right strategy and paired with the right trading plan. So if I'm losing accounts here and there, I blew my 2 3 accounts here and there, of course my confidence level is not going to be that much. So I want to gain my confidence, I have to build the blocks slowly again, because in trading it is not a one time thing. You might be seeing us or you might be seeing me You might be considering, oh, he's a profitable trader now, he might be earning profits here and there, but that is not the case. There is always downtimes in life. Trading is just, you can compare it with life. So some days are not yours, some weeks are not yours, so you just accept it. Now we have accepted it, like we are in a losing phase, losing streak. Okay, then we just lower down the risk, or maybe I buy the smaller challenge. Like normally I buy the 100Ks. If I am in a losing streak, I might can go with the 20K, 20 or maybe 60K. Right now we are switching 60K. Actually, we already have switched it. So I might be going with the 50K. So that's how I build my confidence back. And to answer your question, how much you should risk, it is completely depend on where you are in your journey. If you have data, if you have confidence in your data, start risking. Actually, before that, I want to address one thing. If it is your first challenge or you are new to this space, this prop firm space, I think you should risk 0.5%. Build that cushion, risk that cushion. Because today I took a trade, GBP GBY sells, I made profits on it. I risked that profits in my Euro USD buy trade. Even if I lost this trade, it is okay. I will be break even for the day. So you should do the things logically. If you're a beginner trader, of course your confidence level is not going to be that much high. Keeping that thing in mind, you should start with 0.5% risk, build some cushion, get to maybe 1.5% or 2% in profit. Then you can risk 1%, and maybe you are 4% up, then maybe you can risk 1.5%. That's how I think you should approach challenges. If you are new, if you have the confidence, I think directly go with the 1.5% risk, and you can make the risk static. Just stick with that particular risk management, which is 1.5%. So that's
Yeah.
what I will say. If you are a beginner trader and if you have the confidence, I have already covered all the points. So you can see where you are, and then you can manage the things accordingly.
I agree to that. As to the upper limit, when you're trading with a prop firm, I would always say trade less than you think. Go lower on the risk than you think. If you think that it's okay to risk 2%, go down to 1%. If you think it's okay to risk 1%, go down to 0.5%. When it comes to trading with prop firms specifically, I would really not try and push it. The thing is, you go to a prop firm, the majority of the time you'll go to a prop firm because you want much larger capital allocation, which is something that a prop firm offers most people. And that is a means to have access to quote unquote 100K account. Now, most of us don't have $100,000 in capital just laying around that we can, go and drop into a broker and then trade. So what do we have? We have a lot less than that, maybe $1,000, $2,000, something like that. But when it comes to a prop firm, you're trading their capital. In general, if you are trading with a proper prop firm, let's take the fivers. I'll use the fivers as an example. If you are funded with the fivers, you are part of the pool. You are part of the larger pool, and you get a segment of that pool to trade. So if you lose money with a funded account, the company is losing money. If you make money with that account, the company is making money because you're trading all from the same pool. All right. So the company, the fivers, will tell you, look, we're not going to restrict you with your risk management, but we're going to say there's certain practices that we would prefer. And the preference would be less than 2% per trade. Now, I would think that that is too much already, because consider this. Most of the accounts that you have drawdown, and the drawdown that you have means that that's the maximum amount of money that you can lose on that account before they tell you, listen, you're a losing trader or you're too risky. Sorry, we're closing your account. Now, it can be 4%, it can be 10%, it can be 8%. Depends on the account that you have, okay? Now, if I'm risking 2% per trade on a 100K account with only 10% drawdown available to me, that means that I'm risking losing that account in 5 trades. I can lose that account in 5 trades if 5 trades in a row goes against me. I'm risking 2%, I lose, sorry, another 2%. I'm down 4%. I've only got 6%. So I would always suggest, very much the same way that Samir has suggested, go a lot lower. Start with 0.25%. Start with 0.5%. The thing is, you're going to build slowly, and always approach a prop firm account with the idea of longevity rather than trying to win a sprint. Because it could happen that you are trading 2%, and then you're trading 6%, and then you're trading 0.25%, and then the company might look at you and go, this person is very inconsistent with their risk. They're all over the place with their risk. So risk management is very important. So I would always preface, go on the lower side of risk management. So go give yourself more opportunities to be wrong in the market. When you're right, with your risk to reward ratio being like, let's say 1 to 2 as an example, you can, for every 2 trades that you win, or for every 1 trade that you win, you can lose 2, that kind of like thing. But just give yourself some space to be wrong. And the thing is, you will, I've never met a trader that has had only winning trades all the time. You go through losing phases. You go through segments in the market where nothing is going your way and you go into severe drawdown. I would much rather just give myself a little bit of space should that happen, because it can happen at any time. Moroccan Technologies is saying, what is Trump crying about today? He's crying about Greenland. He's very
He has
upset.
different issues almost every week. So yeah.
Yeah. Good question as well. Per day or per trade? So how much should you be risking per day and per trade? Now, very, very interesting. I think Samir might have a similar viewpoint to me on this, but I do know there's other traders that are going to have a very different viewpoint on this. My belief is I would never risk more than what I believe my account cannot, I will never risk more than what I believe my account can handle. Meaning, if I have a daily drawdown of 3% on my account, meaning I have a daily pause, and it says, listen, if you lose 3%, you can't trade anymore. I would never trade up to 3% in risk. So I would have, hypothetically, maximum of 2% risk a day for my trades. And that can be broken up. That can be broken up across multiple trades, or it can be one trade. But the point is, if I lose a trade, I'm never going to be at that point where my account is going to be in danger, ever. Even with the daily pause, because the daily pause is going to make me think, oh, I'm risking way too much. So in that regard, I would say, find something that works for you. I have a best of 3 strategy that I follow that I feel like I coined, which is, it's whatever comes first. It's 2 wins or 2 losses. So there's only 4 outcomes that I can have. I can have 2 wins in a row, I can have 2 losses in a row, or I can have 1 win and 1 loss, and then a tiebreaker at the end. So it can either be a loss or a win. So there's just 4 outcomes. And the thing is, if I'm risking 1%, it means that on one specific day, the most that I can lose on a day is 2%. I can never lose more than that if I stay to my best of 3 with 1% risk. So find something that works for you. I don't think that there's any specific rule that says you're not allowed to risk up to 5%. But do know that some accounts have daily draws, daily drawdown, and daily pauses. So if you reach, let's say, 5% in drawdown in one day, they might say, hey, listen, sorry, you reached daily drawdown, your account is stopped, or your account is paused, that kind of like thing. So rather avoid that completely.
Yeah. By the way, guys, we are 10 likes away from our almost average likes, which is 200. So, yeah, if you are
Please,
new, just
10
get us
likes,
to our, 10 likes.
please.
We should keep it to 300 likes. Then we may can do some giveaways also.
Yeah, but let's not promise anything that one of us has to go and beg for, Like
Yeah.
if Samir promises there's going to be a giveaway at 300 likes, Sam, you're going to have to go and do that. Guys, can we please have a giveaway for I'll wash my hands of that one.
It's maybe, but if you show us support, then definitely we are here for you. So we are open to give back to our community. So yeah, let's do some analysis here. But we have question here. Let's see, 1 to 2 risk to reward, good trade. Yeah, definitely 1 to 2 is a very healthy risk to reward. Even 1 to 1.5 is a healthy risk to reward paired with a good trading plan. So yeah, do sessions matter in higher time frames, or can I take a trade where my setups comes on higher time frame? I was getting scared of sessions, like if London comes it might sweep it. It is a very good question. So if you are a swing trader, I think sessions doesn't really matter because your stop loss is gonna be wide only, so it is okay. But if you're an intraday trader in forex, then definitely sessions matter, because every session is having different behavior in my point of view. Some days London can show you a very good bullish momentum, and the New York can give you a corrective wave. So with that being said, I think if you want to trade if you want to be an intraday trader, then you should stick with 1 or 2 sessions. If you are a swing trader, then I think it is okay. You can trade whenever your setup is there, because your stop loss is gonna have some kind of a decent distance. So it doesn't really matter. But again, if you are a scalper, if you're an intraday trader, sessions does matter.
Here's a good example. This is NASDAQ. I have these little colored boxes. This pinkish one is Tokyo, the bluish one is London, and then the orange one is for New York. Orange for obvious reasons. But as you can see here, this was on Wednesday, the 14th. The whole Tokyo session was flat. It was very uninspiring. Okay, which is not it's not untypical for Tokyo session to operate like this on NAS, where during Tokyo you don't really get a lot of news or a lot of movement. London was very bearish, incredibly bearish. But what happened when New York opened up? When New York opened up, it slowed down significantly on its way down and completely reversed. The whole of New York was bullish. And then that follow-up was also bullish. So if you had a swing trade, as an example, let's say you entered on this 1 hour candle on the close of that candle, and you had your stop loss just above that section, and you had an open TP as an example. Let's say it wasn't a 1 to 2 or anything like that, and you were banking on the idea that, yeah, we're definitely going to carry on going down, you would have been stopped out the very next day because of this reversal. Now, this isn't uncommon, but in general, I think a lot of people would probably have already taken out profit, maybe somewhere over here on this candle, if they saw like that very, very bullish candle as an example. But the point still stands. Certain assets flow a certain way during certain sessions. Very much, we had a conversation earlier about gold. Gold has a tendency to really rally during Tokyo session, or at least really, there's a lot of drawings on here. I'm going to remove all of them. How far back is this? This is December 31st. Now, December 31st is not a great example, but I'm going to use it anyway. The whole of Tokyo session, bearish. The start of London session, flat. And then pretty much flat, but in this case it makes sense. Anyway, the whole of Tokyo session, bullish. Coming out of Tokyo into London, a little bit flat. Reach a plateau, bearish. Then very bullish again across Tokyo. A little bit of a retracement on London. You kind of like get the idea. Certain assets just move better certain sections, certain sessions, sorry, not sections. And in general, you get a lot more movement either in the New York session with gold, or conversely during the Tokyo session. So if you're an intraday trader that wants to trade gold, it might be worth it for you to go and have a look at these two sessions and then consider whether or not you can trade it safely, or you can trade it without risking too much. And there's another thing to remember as well. certain sessions has certain news events associated with certain assets. So New York session, or just before the New York session, we have the majority of the New York news or the US news, which is going to greatly impact all of the US pairs. So you might have a quiet day or one direction during the day on a US pair, and then when we get closer to the New York session, news comes out, which is going to drastically impact that asset. So it's another thing to keep on in consideration. So can we take a trade as Trump's speech is going on? Yes, you can. The high stakes 2-minute rule is with regards to this time over here. It's grayed out right now, but let's say over here. So yeah, let's do this. Tomorrow morning, 2:30 a.m. UTC +2, so GMT +2 time. For AUD, you can't enter a new trade. But today, we have this annual meeting which says all, which means it's the whole day. You are allowed to take a trade. It's the same with the tentative as well. We've had over here, tentative. You're allowed to trade and open up new trades on yen pairs, even if there's tentative. But once again, I will always preface caution. You know that there's going to be high impact news during that time frame, or potentially during that time frame. Like today, we have President Trump speaking. We know that he's going to say something that's going to move the market. Do you really want to risk it? Do you really want to go and risk putting in a trade when you know that there is the potential for Trump to say something that's going to make the market move? I mean, case in point, gold as an example. That suddenness of that move. You may have wanted to be in buys here and you just got taken out. So ask yourself whether or not it's really worth it.
Trump is talking about stocks at inflation brace for a dump. Yeah, let's see, after I'm a big technical trader, so I will follow my technicals, and after the news, let's see where the market is, which level market is respecting. I know some people would like to kind of combine the fundamentals also, but I am not really a big fundamental guy. I'm not really been that way. So yeah.
Nvidia started out indecisive, printing a bit of a bearish candle. Tesla started indecisive, printing a bearish candle. Apple, very bearish candles already. Amazon, bearish candles already. AMD started bullish, started printing a bearish candle right now. Meta, the stock market opened up bearish as well. Microsoft, same thing. So yes, there is a potential, and you should see it on NASDAQ as well. NASDAQ. Oh, this red line is the New York open. So you can see that there's already this potential impact on that in of itself. So if you're going to trade, just take those things into consideration, I think. Ayush is asking, what book you read to learn trading? Can you suggest one to me? Okay, I'm gonna drop some premium octane knowledge for you. I haven't read a single trading related book ever.
I have tried, but I have finished like 20, 30 pages. I really liked it, but probably my focus was not really that good. But I've tried reading books. I think Market Wizard is a really good book. A lot of people like trading in the zone, but I think Market Wizard is a little bit better because you come to know about how the trader is, how a trader did a certain thing, and in that particular book, there are a lot of interviews of good traders who have made really like millions. So there is interviews of that trader, what kind of personality that trader holds. I wanted to know about it, how I can break some barriers. So that's why I tried to read that book, but of course didn't finish it. But definitely, if you are a reader, that can be a good book.
So Richard Wells, he will be on tomorrow during just before this segment. So Will and myself's segment tomorrow. He loves Best Loser Wins. I can't remember who is it that wrote that book, but the book's name is Best Loser Wins. Then there's Trading in the Zone. There's pretty much all of Tom Hougaard's books that a lot of people have spoken about before. The reason why I'm saying I've never read one of those books is because I've never been the kind of person that learned from learning or from, I've never learned from what other people have done. I've only ever learned from what I have done. So my own trial and error, my own way of looking at the market so that I can have a real deep understanding with how my brain works versus what I'm seeing in the market. So I don't think that there's anything wrong with looking for books. So anything from Tom Hougaard I think is pretty good books, because that's the ones that have generally been suggested. And like I said, Trading in the Zone is a good one. And then also Best Loser Wins. For me, it's always been more the psychological side of things that required a little bit more learning, a little bit more reading. So when it comes to that, yeah, just trading related books I've never used whatsoever.
Okay, Scribble, do you guys backtest? I don't backtest now, but if I am in a losing phase, if I'm losing the accounts here and there, then I make an see the past data, what things is working good. So yes, I do backtesting, but not like I used to when I was a beginner trader. I was on charts all day, but now I do backtesting probably once a month, twice a month, just to be in sync with the strategies that I have, what kind of setup is working good in the market. But other than that, I do see live market and I just draw my levels here and there, which I normally do. Some kind of impulse corrections, EMAs here and there, which I have learned over the time. So now I do live testing more. But yeah, if I'm in a losing phase, if my confidence level is not that high, then definitely backtesting gives you a little bit of confidence. Okay, yeah, this thing is working. So yeah, backtesting I do, but not that often. But if you're a beginner trader, I think it is must, because you don't have that much confidence, you don't have that much live data, you have not been in the market for a couple of years. So for a beginner, backtesting is the must. I think it is the only thing that is going to give you a little bit understanding of your strategy. So definitely you can backtest if you're a beginner. But if you know the strategy, I think now you should live test it. If you have backtested enough, you are an intermediate trader, and you have seen the markets here and there, you know the concepts, you know about the fivers, you know how the high stake account, all these things, so how it works. Now there is a time you need to live test it with a small risk, maybe 0.25% risk, maybe with 0.01 lot size, just to get that confidence, that inner confidence. So backtest for 3-4 months, get data, build some confidence, live test it with 0.01 lot size, and slowly you will get confidence. Automatically your lot size will get increased, your confidence will boost, your monetary gain will increase. You will make $10, you will move to $100, $1,000. That's how you grow slowly. So yeah.
There's one question here from Kusa or Kusama saying, can you show me step-by-step analysis forex market using a swing trading approach? So I will show you one now, very, very simply. This is US Tech 100, so NASDAQ, NQ. Okay. I go over to the 4-hour as an example, and I look for a trend to be broken. It's very simple. Here I have a trend, very easily straightforward. So what I'm going to do first is I'm going to show you what it looks like in hindsight, and then I'm going to do the replay tool, and then you can see it in close enough to what it would have looked like. Okay, so first thing I need to do is I just need to remove these things out of the way here because they are not prevalent right now. I want you to focus solely on this segment here. Just on this. Okay. What do you notice? You notice that from the top point of this section, we have 1, 2, 3, 4 wicks in one area. So 4 tests of a zone. All right. From this zone, we have low points over here. Make sense? Okay. You have low points and you have high points. Okay. So I will mark them. We have a low swing over here. We have a low swing over here. Now, this is the high, all right? You start with marking up a high and you start by marking up a low. So you have a high and low on the 4 hourly. And you want to see how it reacts in this high and low point. So during this phase, up to maybe this section here, you were stuck in this consolidation on the 4 hour. So your high point was set pretty much, and your low point was set as well. You can imagine, right? So what am I looking for? I'm looking for a change of this current established trend. So is the trend sideways? Is it consolidative? Or is it trending? So right now you can see that we have the high point and we have the low point. Now the first thing that gets tested and broken, sorry, wrong tool, is, why are you doing that? Oh, I misclicked. The first thing that you will notice that gets broken is the low, right here. I'm not talking about the wick necessarily, because you have a wick above as well, as you can see, it got wicked. But I'm talking about a break and close. It broke and closed lower than this most recent low swing on this candle. Then what followed up was price pushed back into the zone and tested the opposite high. In this case, this point over here, which just so happened to have been tested here as well as over here after the establishment over this point. All right. Now, it didn't close above. It didn't come to it, push back, and then continue higher. No, what did it do? It just absolutely started tanking lower. So what happened? That low that was broken and closed now has been retested, and it completely pushed through it. So what I would be looking for from a swing trading strategy in this area alone on the 4 hour would be I would look for an area where there's a break. In this case, I've got the break here. I would wait for a pullback into the high and low zone, which we had over here. And then I would wait for price to continue in the same direction as that initial break, which is down here, this candle. All right. And then what I would do is I would go down to a lower time frame. So what I'm going to do is I'm just going to move all of this out of the way, and then I'm going to make a horizontal line on this specific one right here. And then I'm going to go down to the hourly, and I'm going to go and look for it. Okay, it's going to be far towards the left. There we go. I will go and look for it, and then I would look to see whether or not this break, now in the moment as it's happening, you'll see it when I do the replay tool, it's going to move a certain way. But on the hourly, it doesn't look all that great for the break. But remember, here's the low. So this is a very strong impulsive break in this case. Go down even further, 15 minute. Look for any sort of characteristic of the candle to show, yes, there we go. On the 15, you get it on the 15 minute. The 15 minute makes the most sense. There's the break and close on the 15 minute. What would I do then? I would enter a trade right there. I would have my stop loss be in line or just above the most recent high swing point. So remember, this is that high that had the multiple tests. I would have my stop loss above there, and in this case it's a very large stop loss, but then I would go for at least a 1 to 2 on this one as an example. So in this case it's 448, so I need 800, at least 884 for a 2. All right, 2 to 1. this is an idea of a higher time frame swing trade. Now, generally people leave the take profit open and then they just move their stop loss around. But generally what will happen then is you will then just wait a few days for price to play around. It's going to be in profit a little bit. It's going to do what is called a break-even bounce over here, and then it's going to continue going lower. Now, it's not a guarantee that it's going to ever reach my take profit. I might decide at some point over here to close it out, but you kind of get the idea. So that's one way that you can look at it. Now, if I go back to the same 4-hourly area where I took that trade, what do you also see here? You also see on the 4-hourly, there's a lower high, a lower low, another lower high, and another lower low. And every time I have one of these lower highs, what I can do is if I have entered on that trade, which was very close over there, if my stop loss was up over there, I would move my stop loss to be just above that most recent swing point on the 4-hourly. So you just have it as an open take profit, and you just, every time you have a swing point like this one, you drag your stop loss to just in line with that one. Okay, here's technically another swing point over here. So down there is another one. You could have pulled your stop loss down to there or down to this one, and eventually price is going to come up and eventually take you out. That's one way to do a swing trade. Now, you can also do that on the daily. Choose a direction. You see that we've been very bullish as an example. Look for areas where the price comes back down to test a most recent swing point. So price was pushing up bullishly from here. On this day, we had a bearish day and then it confirmed bullish again. Wait for price to come back down to, for argument's sake, the top of this box. So there, but over here. Wait for it to tap you in. Have your stop loss just below that box. And then you have an open TP and then you just leave it to run. That's if you have a very trending asset that's continuously going bullishly, as an example. Wait for an established area to be created. Wait for price to come back to that established area. Hope that it is a strong enough one. In this case, I have a little bit more confidence because over here we've already had a singular reaction off of that area. After it was created, price did come back down to wicket and then push up. Another thing that you could have done is you could have, on the confirmation of that test, if you go down to the lower time frame, you would have seen a slowdown in this area. So if I delete that one and I go down to the hourly, there we are. If I go down to the hourly, I will probably see some sort of reaction here in this area. So let's just do the replay tool. This is going to make it a lot faster if I go back to the 5-minute. Here you will see that exact reaction as well. Price comes back down to that area, just wicks into it, and then makes this bullish candle. You could always have then decided to have your entry point on that candle, have your stop loss either just below there, the last swing point, or over there, and then you have an open take profit, and then you just let it play. Where was that entry now? Over here. Did I miss it? Is it gone? Where did my entry go? Oh, it's on the 5-minute. Yeah, that's dumb. So you'd have your entry over here on this candle over here. Okay, I might have to go down to the hourly. And then you would just leave it to run. And then you adjust your stop loss around every swing point as an example. So something like this, and you just carried on having it run. Now, eventually you would probably have been taken out somewhere over here already if you were moving your stop loss up, but that's for you to test. There's a break-even bounce, and then it continues. Anyway, Samir, we
are almost, yeah, exactly.
We're at the end of the live stream. For everybody that jumped in with us today, thank you so very much for being with us. We really appreciate each and every one of you for showing up, taking time out of your day to come and spend it with us. If you haven't already, please drop us a like, please drop us a subscribe if you haven't already. We're trying to get to 100K subscribers. This is the Fiverr's 10th anniversary, so our 10th birthday this year, which means that when we're celebrating the 10th year, on that month, we're going to have a massive surprise for everybody. And it would be awesome if we could have 100K subscribers alongside that event, because then it's going to be even bigger. So the giveaways that we have planned and the entertainment that we have planned for those segments for the 100K and for the birthday bash is going to be legendary. And we can only get to 100K with you guys' support. So please subscribe if you haven't already, and share it with anybody that you think might be interested in learning how to trade from a reputable prop firm that only has your best interests at heart. So yeah, Sam, anything from you, my friend, before we sign off?
Again, it is lovely to be here with all of you guys and our viewers. Thank you again for being a part of our community. And let's get to 100K, guys. And big things are coming. And with that being said, guys, we'll see you in the next stream, which is going to be tomorrow. And take care, guys. Bye bye. Don't overtrade, don't over risk. With that being said, guys, let's call it a stream and take care. Bye bye. See you tomorrow.
Awesome, guys. Thank you very much to our producer in the background, Remy, for your hard work as well. We'll see all of you all tomorrow. Cheers.